Good morning. Thank you all for finding the time and joining us today in our trading masterclass today. I am Pamela Chaparro, sales executive at ATFX, the FCA-regulated online broker from London, where I'm speaking, that offers products in Forex and CFDs. ATFX is focused on excellent execution, competitive spreads, and high standards of customer service. I would like to highlight to everyone in this event today that this event was possible thanks to ATFX bringing live events like this to the comfort of your house. On today's event, I would like to, first of all, just double check with you if you can give me just the thumbs up or just give me an okay in the chat to make sure that everyone can hear me well. And that you can see my screen as well. Today we have Anna Perez as well organizing the event. Anna, could you please just give me a thumbs up or confirm that you can hear me well?
Hi everyone, and hi Pamela. I can hear you on my end, and I believe people
Excellent. Excellent. Thank you very much. I can see that that we have an okay as well from the audience. Thank you. So on today's event, we're gonna cover. We're gonna have first of all 3 leading financial experts that will present some of the most trading topics in trading at the moment, including COVID-19. That couldn't be out of the agenda, of course. So our experts will be discussing various topics on how the pandemic is having an impact in the financial markets. I will give you a quick brief of what is coming up in the upcoming hours. We will kickstart the webinar with Alejandro Zambrano. Apologies. Can you see my screen now? Anna, can you confirm it to me?
we can. It's great.
Excellent, excellent. So we will kickstart this webinar with Alejandro Zambrano. Alejandro is as a chief analyst. He will be showing us the outlook, this month's outlook for crude oil and prices and the Dow Jones as well. That webinar will take around 1 hour. We're going to have at the end of the session some time for a Q&A. So if you have any questions, feel free to enter your questions through the chat. Alejandro normally covers, does a very comprehensive overview of the market. So we will try our best to squeeze some time for Q&A. So Alejandro can clarify all your questions at the end of his presentation, followed by Mark Owen, who's gonna show you how to trade, how to start trading the correct way. He's gonna give us some tips and tricks during the hour of his presentation. We're gonna have a brief presentation of Marcus Tixilema as well at 11 o'clock in the morning, showing you the main features of the MT4. And how you can take the best out of the MT4. Very interesting presentation as well. Followed by Ken Chimko at 11:30, showing you or making you understand about trading fundamentals, which are causing a volatile market, the volatile market conditions that we have nowadays. And we will be closing the set of webinars with Roger Bourne, presenting the market outlook on charts. In about 8 minutes, we're gonna have Alejandro that might be already getting ready. I'm not sure if Alejandro is with us at this moment. So you can. Hi, Alejandro. Are you in the line?
Yeah, I'm here. I thought it was muted as well.
Excellent. You're quite early. We're very happy to be able to present this quality of information to all our audience. Alejandro, do you want to present yourself before we start with your presentation itself?
Yeah, I can. I have a slide actually about myself, and so I'm definitely going to cover a bit about myself. Do you actually want me to start?
Yes, that would be, if you're ready
Okay.
to start, that would be excellent.
Okay, let's do that then. Just give me 1 second here. Just a sec.
So in the meantime, if you want to grab your coffees, you can go ahead and do so. So
Actually, we're going to start now, so
excellent.
we'll
Okay,
start
so no
now.
coffee time.
No
Pause the
coffee
coffee for
time.
this.
That's too late for that now. Let's try to
Good.
activate this little pointer here. All right, good guys. So thank you so much for joining me this beautiful morning, at least in London. Well, it's not really beautiful, but I can see the sun coming up, so that's always good. One big benefit with lockdowns, I don't know if you notice it, but less pollution and more sun. So that's something that cheers me up. Anyway, we're going to talk a bit about the markets. That's also something that cheers me up. The market volatility you're seeing right now is very interesting. And as a trader and a speculator, you need to have market movements to be able to make money. So it's been some terrific last few months of market volatility, and hopefully this can continue for longer. So we're going to talk about the Dow, the DAX, and crude oil. The first half an hour or so is going to be about the stock markets, but it's also, of course, we're going to talk about the coronavirus, and then we're going to transition to crude oil markets. So that's what we're going to be doing. Okay, good. So who am I then, and why should you spend the next 60 minutes with me? Well, my name is Alejandro Zambrano, and I lead the team of analysts at ATFX. I'm also the creator of the site investingcube.com, which has a separate team where we produce market analysis. And I've been around for some time in the industry. I was the chief market strategist for the FCA regulated broker Amana Capital, which you might not know about, but it's actually probably the number two, if not number one, retail broker in the Middle East. Very, very strong position over there. But before that, I was working for ATFX, FXEM, between 2009 up until 2016. Let me just see something here. Sorry for interrupting here. Yes, using the right microphone. Good. Okay, so from 2009 up to 2016, I was working for FXEM, which you probably know of. And you probably also know about the website dailyfx.com, especially if you're trading Forex. I used to do produce analysis with DailyFX. I used to manage their forum. I used to do articles, of course, and hosted big events with them. And I've pretty much been I've been doing presentations in the UK, Sweden, Greece, Italy, Spain. I've been in Dubai. I've been in Beirut and Lebanon. I've been in Singapore. I have been in Shenzhen, which is mainland China, at least 2 times doing presentations. So I've been in many different parts of the world talking about the markets. But that's not really why you should listen to me. I think one of the key points that I can offer is that I've been trading since 2006. I started as a student, had about 2,000 euros back then, and I started trading in 2006. And since 2006, I have obviously accumulated a lot of different experiences. I traded many different systems. I lost a lot of money up and down in the first few years, but since pretty much 2014, I found a system that works for me, for my personality, but more importantly, something that actually makes money, which I think is again probably the most important thing. So definitely stick around here because I'm going to show you a few things and a little bit on how I look at the markets. Before we kicked off though, I don't know if we did this, but I need to show you this thing. And please bear in mind that we're going to have a bunch of great analysts and traders here today. They're all going to be talking about how it is to invest and how they trade. But at the end of the day, there is unfortunately nothing guaranteed. You know, you might make some money with these strategies. You may also lose some money with these strategies. And many times it has to do with the fact that the system you're using maybe does not fit your personality, or just you don't have the patience to use the system, because trading is not for everybody. You might think so, but it's not. You need to have very thick skin to be able to trade. If you get nervous easily, your cortisol, your testosterone levels go up quickly, you get you have that temperament, then maybe trading is not best for you. Maybe something else is. So bear that in mind. So we're going to share a bunch of stuff with you, but again, this is not financial advice, this is financial education, if anything. And please bear in mind that anybody trading with the retail broker ATFX, 67.67% of their clients lost money in the last quarter. It's a little bit like what you see on you when you smoke cigarettes, right? You can get cancer, you can die. You can't die of trading, but you can definitely lose money. And 67.67% of people lose money when they trade with ATFX. So please bear that in mind. Okay, good. All right, so what are we gonna do now then? So first we're gonna talk a bit about what happened in 2013 and SARS, and how we can use that information to understand what happened here with the DAX and Dow Jones and what might happen actually going forward. This was a great help for me because I actually spent some time reading up on this on January, and I was tracking the China lockdown very, very closely. And the reason why I did that is because I was in Hong Kong when the whole thing started. I was there for a big event with ATFX, and I started to read how this new things was spreading. I was talking with some of the guys at ATFX over there. Some people worried, some people did not worry, but I picked that up quite early on. And just to give you an idea how scary, I mean, it's not scary, but I was at the Hong Kong airport on the same day that the guy that gave Ecuador all of its coronavirus cases. So the same guy that left from Hong Kong airport to Ecuador, and you probably read about that on the news, how crazy it is over there. I was in the airport at the same day as he left. So that obviously shook me a bit. And I actually got masks as soon as I came back to London in January. I got masks. And already then I could see just by looking at Amazon that it was going to take about 2 to 3 weeks to get those masks. So I actually went down to your local do-it-yourself shop, Screwfix, and I got myself a few masks. So I've been looking up and trying to understand this, and that actually helped me a great deal with navigating and trading the DAX and the Dow Jones, because just looking at these two examples, I got a very good idea what happened here as well. Trying to look beyond the near term. Everybody's sort of focusing on what's happening right now with the US economy, but guys, come on, look at China. What's going on over there? China is our future at one point, and when the lockdowns move up east, and that's why I pay a lot of attention to what's happening in China, and less attention to what's happening, for example, in the US economy and even our own economy, even though of course that will influence. I think the markets themselves as an aggregate of focusing on what's happening in China in the future. Then as well, we're going to talk a bit about crude oil markets and what's going on in that sector. Okay, good. So let's take a step back. Let's go back to 2003. Okay, so in November, actually in February 10th, 2003, China tells the world about a new outbreak of a new virus, right? But the actual outbreak apparently happened around November 16th, 2002. So the spread had already been ongoing for a few months before China shared with the rest of the world what was happening. And this has been, they were heavily criticized for it at the time, and they did make some improvements for the next round of for this round, which is COVID-19. By February 2003, the spread had reached Hong Kong, and then by March 27th, Hong Kong announced cancellation, so closure of all schools. Here is the cases and death toll. It's a totally different ballgame of what we're looking at today, numbers-wise, but the fatality of this disease was actually higher. It's quite much higher than what we're seeing with COVID-19. Obviously, we don't know exactly if this data includes everything, but what's quite interesting, for example, is that if you look at the Diamond Princess, that cruise, when you had some 700 people locked up, the death rate there, because that acted, by the way, as a perfect experiment or like a natural experiment, the death rate, I think, is about 1.5%. Why do I say this? Well, because those people on that cruiser were locked up for about 4 weeks or so. They were locked up for they had 2 weeks of, pleasure, visiting and sightseeing. And then they had another 2 weeks were under lockdown. So effectively, I guess pretty much most people that could have got it probably got it on that boat. And what you can see there is that death rate is about 1.5%. If you look at what happened with SARS, though, the death rate was much higher. In Hong Kong, 17% of people died. However, though, it didn't spread as easily, but it still spread quite aggressively. What's quite interesting is that, if I remember correctly, there's like one doctor or so that visited a hotel in Hong Kong, and he stayed on, I think it was the 11th floor of this hotel, and eventually everybody that was on that floor, more or less, got the disease from that person. So we had a very similar situation. So what happens with the markets then? So the outbreak, this is the Hong Kong stock index. In 2003 was easier as well to trade the Hong Kong stock index, and that's why we're going to focus on that one. And Hong Kong, at the end of the day, was the country or the territory region that reported the second high amount of infections and cases and deaths. So you can look at this, right? So even heading into like in 2002 and 2001 or so, the stock market in general was just in a downtrend. But you can see here how the Hong Kong stock market was moving down lower from this high here in pretty much early December or so, all the way down to the low. The market dropped with 18%. And this is when people thought in November 16, that's when people think that the outbreak started, and then the market started going down, and then China reported a few cases, and SARS had also reached Hong Kong, and the stock markets continue to trade lower and lower and lower. Here you have when Hong Kong schools closed, and then this is when they gradually started to reopen. So you can see here, it's quite interesting, is that when they start to take action, the governments, that's when we'll start to see the turning points in the stock markets and the economy. But there's more to it than that. So this is in the histogram, that's the daily increment in new cases of SARS in 2003. And you can see here that in March 17th, the number of cases going up and up and up and up and up. But around the end of April, we have a peak here. And by May, the daily increments have already declined. You can see that we go up and up and up, big spike, and then we start to get less and less increments, so less and less people start to get the disease. So if I overlay that information here, so this is the end of April, beginning of May. You can see it says May here, just underneath here. So the Hang Seng here is the blue line, and you can see how it goes down. And then when the maximum amount of people were getting infected, like the highest daily speed change, that's when the thing moved upwards. The purple line is the Shanghai composite. Shanghai composite was not really affected by the situation. Another index, though, that was influenced was the Nikkei 225. That's the Japanese stock market. You can see how the Japanese stock market and the Hang Seng declined in tandem, bottomed out here, and then started to go upwards. This is also very interesting. And, you know, everybody was sort of waiting for the World Health Organization. And it's the same thing here. People just waiting for them to tell you to shut down the borders. Whereas people like myself is like, come on, you know, Italy, what are you guys doing? Just close down already. That's what I was thinking. And everybody else for that matter in the UK as well. But people I don't think people understand the power of exponential growth. And we're going to talk about that in a minute, how fastly this was spreading. If you're like an investor, trader like I am, then everybody, well, not everybody, but most people that are speculating, they will say, okay, this month I did X, Y, Z percent. And what happens if I do the same percentage amount for the whole year? And you get your annual rate. So a lot of speculators and traders have done this before, and it was the same thing here. When the number of cases, like they were in China, were increasing with 35% per day in 2020, then it's easy to foresee how we're gonna have hundreds of thousands of cases across the world. But the World Health Organization, the reason why they're slow is because they have two objectives. One objective is to protect the health of everybody. The second objective is the economy. And is that balancing there? There's a conflict of interest between them that they always make sure that they're late because they don't want to rush out and tell people, close your borders, don't do this, don't do that, because that's going to wreak havoc on the economy. And that's why they were late. So they were late issuing this, and then they actually refused to lift the travel warning for China and Hong Kong on May 20th, and it was first on June 27th that we actually saw that being lifted. But the Hang Seng market went from about 8% negative to plus 10% over the period. So you're looking at an 8% return or 18% return or so over that period. So if you're focusing on what governments are telling you or what the World Health Organization is going to tell you, as a speculator and a trader, you're going to be left behind because they have a different criterion what they use to look at. And as well, they don't want to be, they rather be careful and cautious. So that's why, for example, when you look at the OECD forecasts and all this stuff, people tweet about it and share about it. Oh, look, this is going to happen. But again, you're looking at a big governmental body that is producing these forecasts. And what happens here is they don't want to step on anybody's toes. So they try to stay safe. That's what everybody tries to do. But as a speculator, you need to put yourself at risk if you want to be able to make some money. So what can we learn from this chart in the first 10 minutes of me talking? Well, first things first, the World Health Organization, they're not going to tell you when to buy and sell. In fact, they're going to be late. They're going to delay with telling you that it's unsafe, and they're also going to delay with telling you that it's safe to go back and visit these countries. So what we can see is as well, the other thing as well is that the stock markets tend to bottom out when things are at their worst, because from this point onwards, the market says, well, going forward, we're going to be better. So obviously, when we're here, when everything is very extreme, nobody's going to go and buy yourself a new iPhone or a new car or install a new kitchen, right? But so the share price of all these different companies that produce all this stuff, they're going to be at low levels. But then 2 years from now, or even half year from now, are people going to be buying iPhones? Well, Morgan Stanley reported that that the things and electronic sales are back up in China again. So that's when it's time to invest. The other thing as well, which is really interesting, is that when the countries start to hold meetings or prepare and take serious action, that's when you start to see the turning point. And that was really clear in the case of the US and in Germany and Italy and all the different countries now in 2020. So what happened in 2020 then? Well, in 2020, in January 20th, the market was heading upwards. This is a chart that one of the analysts at Investing Cube produced, okay? And the Shanghai composite had been going upwards, and what's happening here is that people were excited, right? So people say that, well, the Chinese maybe knew what was going on. Well, if anything, this chart, I think, tells you that they didn't know really what's going on. I don't think the markets would have been going up this much if people with money, imagine this, people with money in China, close to the political elite and people with information, they wouldn't be buying a lot if they knew what really was happening, right? So this can sort of show you that they probably didn't know. Maybe I'm wrong. Maybe everybody sort of were denying it or something, I'm not sure, but I'm talking and referring to what you've seen in the news over the last 2-3 days, that China actually knew that they produced the virus and so on and so on. Anyway, on January 20th, you got 278 cases. Stock market is going upwards. Everybody's super excited. People think it's going to go upwards. All right, come January 21st, and the number of new cases is 326. So that's a huge jump from 278 cases, which is here on January, and then to January 21st, you got 326 cases. From 326 cases, we go to 554 cases on January 22nd. That's a daily increase of 67%. From January 2nd to January 23rd, we jump to 39 cases, which is a growth rate of 16%. What happened here are a few things. People sold because of the virus, and people sold because of the Lunar New Year. Lunar New Year is like the Chinese New Year. Simple as that. They take time off. China closes down for about 2 weeks or so. People relax, okay? So people were booking profits because of that, but also because of the virus. When the markets reopen on February 3rd, there is not 639 cases in China anymore. There's 19,700. That's a huge jump. I didn't bother to take all days into account because we don't have price data for it anyway. But from January 23rd, when they closed the market, until February 3rd, the daily growth rate was 36% on average. And that's what we gapped massively. When the market opened, the market from this close was down with 7.65%. From its yearly high to pretty much the low that was reached 1 day later, the market was down with 14.14%. What the government in China did here as well is that they pushed, or the Chinese central bank pushed a bunch of money into the system to support the markets. What's also happened is that on January 23rd, so just when they closed the market, they actually pushed for Hubei, which is the region where Wuhan is the capital, was closed down on January 23rd. We could see that on TV, how police and military vehicles, and police primarily, actually lock things down, right? And because it takes maybe 2 weeks or so to get this disease and sort of show symptoms, what happens that about, this is actually not exactly 2 weeks later, but I think it's like 10 days later or so, you see the drop in the growth rate. So from expanding at a daily rate of 36%, from February 3rd to February 6th, the growth rate was just 11%. That obviously is a massive drop. And as we saw with SARS 2000 and 2003, the market moved upwards. So armed with this experience and that knowledge, when I was looking at the DAX and the Dow Jones, I used that information to understand what was happening. So what can we learn from people's reactions then? Well, for people and for investors, even if you might not agree with it, is the growth rate of the spread that is important. It's not where the unemployment rate is, it's not where the number of viruses are, it's the growth rate. There's a guy that tweeted to me. I said, I think it was March 26 or something like that. I said, the market is probably going to go upwards from now, something like that. I said, and he said, like, let's wait until we reach 1 million cases in the U.S. I think we were about 100 and something at that time. I said, let's wait until we reach 1 million and then we can buy. What has happened since then? The stock markets are higher. So stock markets are higher. You had a few dips you could buy throughout this period, and the markets are higher. So the actual amount of people sick obviously has a bit of an influence, but it's not what is the driver here, and has not been the driver. In 2003, in 2020 here in China, and also now in Italy and Europe with the DAX and the Dow Jones. So people sold when cases were increasing sharply, and they bought when they anticipated a slowdown. Let's take a look at that then. So I probably should have done a chart over Italy because that's where it started in Europe. So in Italy, obviously things turn worse quite quickly. You got places like Germany, which is very close to Italy. You got France. All those different stock markets started to go down on the risk of a closure in Europe, right? And you had this unprecedented drop. Well, actually, you have seen more aggressive drops in the DAX, but you're getting this very, very fast decline in the stock markets. And this is, for example, on February 27th or so, the number of cases in Germany increased with 200%. This goes through the roof here. I think it's 450%. And then things go aggressively higher and higher. But you can see here on the 23rd, on March 20th or so, this market reaches a 73% growth rate, and since then the market, the growth rate just drops and drops and drops. It was also around the same time as we had a 51% growth rate in the US, and it was also around the same time that they locked down Germany, California, and New York. So when the governments took action, the spread slowed and the growth rate slowed, and the economy moved upwards. The DAX moved upwards. Now, a lot of people are shocked. Like, we had some terrible numbers, first quarter GDP numbers from the US, and some people were shocked. Like, why are people buying the Dow Jones? Why are they buying it? Well, because we had this is Dow Jones, by the way. We had the fastest decline in the Dow Jones we've seen in ages, and that was telling us that we were going to have a very, very bad first quarter. The fact that we moved upwards here in the Dow Jones and in the DAX is because the market think that Q2, Q3 is going to be better than Q1. The market is clever enough to react. In this case, is reacting at the same, in tandem at the same time. Okay, the Dow Jones declines, you get a very bad first quarter, and it all makes sense. It all makes sense, guys. Let's not complicate it too much. In 2008 and 9, it was a slow death of the economy, so to speak. You have these problems, one sector turns really bad, and then it influences another sector, and then it influences somebody else. So everything which just went really slowly back then compared with now. The reason we have this big crisis to begin with is just because the government said, okay, guys, from tomorrow you need to stay at home. And that's it. That's why we have so many unemployed people. If this would have been a normal situation, then numbers would have creeped up. And what's interesting is that without the lockdowns, people would have stayed home anyway. If you think about it, if people start to die, then your neighbors start to die, if someone in your family dies, you would have stayed at home. So we would have the same situation. It's just that we would have been dragged out. But what happens now is the government put their foot down and said, no, you stay at home. And that's why we have this massive collapse. And the numbers are declining. Now we have hospitals, they have the protective gear that they need, the doctors and the nurses in many places of the world. There's remdesivir, which is supposed to shorten the length of your sickness if you get it at the right time. And maybe 1 year from now, we'll have a vaccine. In fact, they already started to do trials on vaccines in Oxford University, right? That was on the news like 2 weeks ago. So get that in and slow down the spread, and we're going to be okay. And that has been my main thesis here. And I'm going to explain to you as well. There's more reasons to it than that. But long story short, you can see how virus infections increase, and when things start slowly, the market just tumbles. It tumbled when it started to tumble even before they had some significant cases in the US. It's just because in Germany and places like that, the market had already slowed down. So the Dow Jones, the German DAX got ready because Italy was in trouble. And then US stock markets went down because they saw that Europe was in trouble. But what's interesting here that the German DAX bottomed out pretty much when they had this local high of 73% growth rate, because naturally when you start to close down your economy, you'll have a slower growth rate. And then you have US, which you had a growth rate of 51%. So add 51 plus the 52 or so from Germany, you had a huge growth rate in both sides of the Atlantic on that day, and then US bottomed out a few days later. So this is March 19 or so. This is the same day as the close down in California. New York, which was sort of the epicenter of the spread in the US, closed down on March 22nd. And then the market low in the Dow Jones was on March 23rd. And since then, the market actually moved up higher because people think we're going to have lower spread, less people. I mean, the growth rates are going to decline. And surely they did. And now we're in a situation when we have low growth rates in the US. Potentially, remdesivir can do a lot of help, maybe a vaccine, and things start progressing good. And that's why the market mounts upwards. So my big case for this year has been to to buy at the lows. And I did that because I do a daily market update on ATFX YouTube channel. I tell people, look, to get involved, this is going to go higher. We're going to be okay. We're going to go upwards. And surely we did go upwards. Now, why as well am I so confident in that situation? Well, what happened with China? Remember that China is ahead of us with a few months. So look at China. Don't look at what's happening right now in Europe. Look at China to try to get a rough idea, because we don't really know exactly what's going to happen, but we have a rough idea. Now, the guys at the Financial Times doing a terrific job over there. I'm subscribing to them, and they've been sharing this. So what they've done is that they look at, this is like their economic tracker, where they try to understand what's happening in the Chinese economy. So what they've done here, that in the beginning of the year, that's 100. That's when the economy was at the beginning of the year, that's 100%, okay? And I reckon it's at 100% and it's at its highs there because we have Christmas in the Western world, and what's happening is that we all buy a ton of gifts and stuff that we don't necessarily need. So, and a lot of that is produced in China. So you have a huge production and have a peak in production there. And then just ahead of the Lunar New Year, the economy slowed down. And this gray line is what happened in 2019. So you do normally have a slowdown during the Lunar New Year. And then after the Lunar New Year, the economy picks up again in China, and then it goes down again. But it eventually does head higher eventually, because this is the 100% of 2019, right? So so we tend to have slow down and then pick up. But this is when Wuhan shut down. So you have the economy tanking. They fortunately don't put all the levels in, but it seems that it lost about 50% of its capacity. And then the market moved up. So my thesis was, okay, you're not going to be buying yourself, Apple shares and whatever I don't remember all the different names in the Dow Jones, but all the big names, you won't be buying them. You don't necessarily think all these companies are going to make money here, but eventually they will bounce up. And my idea was, okay, so we've seen how the economy in China lost 50% of its capacity, but then started to recuperate. Same thing is probably going to happen in the Western world, and that's why as well why I was so bullish. Looking at this today, you can see how the economy recuperated more, but we're still obviously missing out on a big piece here. Why are we missing out that big piece then? Because the Chinese economy is an exporting economy, right? They export a lot of things. And what's happening in Italy, what's happening in Europe, things are on the lockdown. I have an old friend of mine when I was in my old neighborhood, because I was raised and born in Sweden. He works for Volvo Trucks, and already I think in February or so, he was told don't come to work. Why? Because they don't have the pieces to all the parts to assemble a truck. So he has already been home for quite some time. And also Volvo Cars, which is a separate company owned by the Chinese now, they as well shut down their plants because they couldn't get parts from I don't know if they couldn't get parts from China, but I do know that China's slowdown did hurt a lot of companies from getting parts. But now when things are going to start to pick up in Europe, I think this gap is going to close. We're definitely not going to go up exactly where we were last time, but we're definitely going to have a bit of a gap here. But it's not those horror stories that we have seen on Twitter about a total collapse in the world economy, and that tells me that we should have bought stocks in the low. So how do we make up these indices then? How did they do, the Financial Times then? So look at real estate floor space sales. They look at that to get an indication. This one is important as well. It's power plant coal consumption. So they use this to produce electricity, right? So you can see here that because the factories were closed, we didn't have a huge production of energy as we normally do, but now they have catched up. You have container freight, which is our exports. You can see that exports are still not picking up. In fact, they're declining. So you have that being a big issue, and that is influencing things. You got traffic congestion, which is actually back at where they should be. I mean, where they usually are. So back at 100% traffic congestion. You got air pollution, which is moving up again. So you can see that factories are opening up. Not everything is opening up though. Ticket sales, I mean, cinemas and stuff like that is all closed. The retail sector is still sort of service sector is still suffering, but this is supposed to open relatively soon. And there's other things that are opening up. I think Morgan Stanley did an estimation that restaurants are back at 50% of capacity. Let me see here. So apparently, traffic at shopping malls are back at 70% of normal levels, and shopping malls are fully open in China. So they're back at 70%. Online retail sales in China, which accounts for 30% of total sales, is growing on the year, and restaurants are having 50 to 80% of the customers back. But nightlife venues are still closed in tier 1 cities, and cinemas are going to remain dark until early June. That's actually, I just reading through here a report from Morgan Stanley. So things are improving. Here's some other things as well from Morgan Stanley, but published on the Financial Times. So production of normal levels. So normal level will be your 100%, right? Express deliveries in March, which is the light blue color, we're back 100%. Autos were not 100%, maybe we're at 83 or something like that. Still can go up to 100. Consumer goods pushing towards 100. Technology pushing towards 100. Property construction still low, pushing towards 100. Industrials almost at 100. Basic materials pushing towards 100, but not there yet. So the Chinese economy is moving back up. They're not having a huge amount of infections. People say that's a cover-up. Maybe it's true, maybe it's not. But the truth is always somewhere in the middle, I guess. So even if you would multiply their numbers with maybe 5 times, it's still not bad numbers. So the situation is improving. Is it gonna be amazing? Definitely not, but it's definitely improving. Let's take a look at this. This is the China Caixin General Manufacturing PMI. So this is the survey that we all focus on. It's like the ISM number, like the PMI, and you can see how the numbers went negative. When it sort of went really low, went down to 40, pretty much like here, but then they bounced up. You might say, why did they bounce up so quickly? Well, why did they slow so quickly? Because they locked down the economy. They put a police in front of your door. You can't get out. That's why. So the whole drop, because of the virus, but government put their foot down and said, stop, we're not going out. And that's why everything slowed. But now they're saying you can leave your house. Just make sure you have this app, make sure you check your temperature. And if you do have the disease, you need to go here and there. So they have controls now. It's not like before, but it's definitely not the meltdown of the world economy or the meltdown of China. Now let's talk about the US economy, because that's where people are focusing on right now. And it is something we need to pay attention to, but it's not what people are trading on. So this is US initial jobless claims. For the week of March 13th, you had 282,000 people that lost their jobs. That's normal numbers for the US economy. People lose their job and then they're out of a job and then find something else, right? These are good normal levels. And even before that, I think initial jobless claims numbers declined to levels not seen since 1973 or so. Then you got March 20th. When did they close down California? On March 19th, right? And then New York on March 22nd, I think it was. So of course you start to see those losses here. You have the small business owner, you got people running a restaurant, he needs to close down. If he doesn't close down, he will go bankrupt. If he goes bankrupt, the workers have no work to come back to. So what do? They push the risk to the worker and say, okay, I'm sorry about this, but we're closing down. But when we open up, you're gonna get your job back. What does the government do? The government sends everybody a bit of money. In Europe, we have super generous deals. The Italians are getting 80% of their salary. In the UK, you're also getting 80% of your salary up to 2,500 to a maximum of 2,500 pounds a month. So it's not a huge crisis yet in Europe. My sister, she works in the hotel industry in Sweden, and she actually was made redundant. But they're paying her full salary until September. After September, some government things kicks in, and I'm sure she can spend some 9 months with no working, and she'll still get some money. So at least in Europe, the governments are stepping in here, and it's the role of the government to help you. No, that's why we have governments. Otherwise, we could just be back at the Stone Age, and everybody just needs to take care of their own. So anyway, numbers are very depressing. You get 3.2 million people losing their jobs, 6.8, 6.6 million, 5.2 million, and then you have 4.4 million, and then you have 3.8 million. So you have that aggressive move up in the US economy. Unfortunately, the US economy and the US government is not as generous with its people. But then as well, they don't pay as much tax as everybody else does in the Western world. So in Europe. So that's why they also don't have the same security. It's a choice to some extent. But all these numbers, what it means is that there's set to be a decline of 22 million jobs for the non-farm payrolls on Friday, okay? And then compare that with a drop of 701,000 new jobs in March. So 22 people anticipate to lost their jobs in April. We'll see that final number in by the end of the week. The unemployment rate is probably going to reach something like 16.3% from 14.4%. So this is going to be the highest monthly rate since 1948. That's the last time the interest rate, the unemployment rate was this high. You're also going to see the annual rate, because I reckon that they don't have monthly data for this year or for these years. Very old things that happened in the past, but it's going to be the highest annual rate since 1939. That's how bad the situation is right now. However, as we just showed you, jobless claims peaked relatively fast, and since then things haven't come down. Now, this is a scary chart. This is the loan delinquency rate, all loans and leases, and this is the unemployment rate. So delinquency rate on loans is right now around 2% or so, slightly below 2%. But if you overlay the unemployment rate on top, then we might go up to maybe a default of 7.5% of all loans. And this can become a serious problem. And this is something we need to pay attention to. And it could become a reality, okay? It could become a reality. So if the US does not open up soon, but they have started to open up, by the way, but if they don't open up soon, there could be a situation in the US, because they're not getting that support as we're getting here in the Western world, and in Western Europe, there could be a situation where people are forced to sell their homes. People do go bankrupt, and I do think people will go bankrupt. So it can definitely become an issue. But my main thesis is that when they open up the economy again, you're gonna see a large drop in people here being unemployed. Because the reason that it went up so sharply is because from one day to another, people just say, okay, I need to let you go. And what happens is that they're gonna bring some of these people back. So if you run a hotel, I don't know how many people you need, but it's probably more than 50% of the staff, maybe 60% of the staff to run a hotel at its minimum. Maybe even at a hotel, even at a restaurant or a bar, you still need a chef, you still need someone to a waitress, you still need someone to do the accounting. So there will be a bounce back in the economy. I'm not sure how much we're going to bounce back. But if there's a situation where we have a second wave spread of the virus, if there's a situation where we have a lockdown that continues for longer, we're going to be in serious problems. Now, we talked about this already a little bit, but let's go through it again. The Italians, they get 80% of their salary. I don't know if there's any cap, but they're about 80% of their salary. In the UK, you get about 80% of your salary as well, up to 2,500 per month. That should help most people, especially if you have two and you have a mortgage, that is possible. In the US, they get about 1,200 per person, plus, as far as I understand it, another $500 per child. I think that was a one-off, as far as I understand it. They must have filled out like a 2018 and 2019 return. If they have not, they can still. I think they can still. Well, as soon as that money, by the way, the 1,200 goes away, you can still get some compensation, which is from about 20% of a month's wage to just over 50% of a month's wage in the U.S. So you still have some support in the U.S. and this will last. I think it's for about 26 weeks or something like that. So people are getting some support, and this is going to help to overcome. Maybe they'll make some more changes. Like in the UK, this is just going to last until June, but the finance minister said, or the head of the treasury said, that we're going to get probably an extension of this. What are governments doing then? Well, let's take a look at central banks. So central banks, this is the Federal Reserve balance sheet. According to Morgan Stanley, they think that they're going to push about $7.8 trillion into the system until 2021. And the QE they're pushing here is going to be more than the QE they did, the first QE, the second QE, and the third QE. It's going to be more than that to push the economy. And that is money is all going to stock markets. Then I didn't have a list, but pretty much, I think the fiscal package in the US was around 10% of the GDP. It's probably going to be more. Everybody's pushing a lot of money into their systems to support their citizens and support the economy. So I think we're going to be all right. Let's take a look now at some of the charts. So let me see here. So if you look at something like the Dow Jones, my idea for the Dow Jones was is that, okay, as soon as the infections drop, people are going to look to the future. They're going to see that the numbers can probably just go higher. To give an example, the PMI composite for the euro area dropped to 13.5%. Now the indicator goes from 0 to 100, so it can't go much lower. What's going to happen when they open in France in 5 days or so? I think it is maybe already on the 7th. Some bars, I don't remember if it's bars, but some factories and stuff like that is definitely going to open up. And as well in Italy, they opened up. I bought some shoes from Italy. I bought them over the weekend. I think I bought them on Friday, and DHL delivered them yesterday. People are back at work. Don't necessarily see it, but the general idea is that these indicators, they are rock bottom now. But probably not even the numbers for May. The May will improve a little bit, but just imagine that number for June for the PMI indicator. It's not going to be at 13.5. Oh, it's going to be maybe at 40, 35. Come July, 45, maybe 50. Come August, we'll be above 50. What's going to happen in the US? You're not going to see, from payrolls, negative potentially. You're probably going to see US economy added 5 million jobs, 10 million jobs. That's what I'm thinking. So when I was looking at the Dow Jones, we're down at the rock bottom here. I said, okay, let's potentially buy down here, and let's go with the trend. And for now, the trend does remain bullish, and this is a 6-hour chart. So you can see how the price is creating higher and higher lows. And as long as you trade above this level, which is the low from April 21st, we're going to be dealing with a bullish trend. We could have, of course, take this level out. So if we take out 22,919, we can probably go lower and can probably reach something like 22,750, 778, sorry. But for now, everybody's super excited and they trend us upwards. And we have corrected in the Dow Jones, we have corrected almost 61.8% correction. So it's a little bit what we've seen in China. The economy goes back up. It doesn't reach 100%, but it does goes to 65% or so of its capacity of the beginning of the year. So for now, I'm going to remain optimistic. I'm going to remain bullish because I think the numbers will improve and people will be scratching their heads. People are so anticipating a massive decline as well. The retail investor, and the retail investor itself doesn't tend to be right about things. So I think we can continue to go upwards. If we go down a lot, if we break below here to here, we can, if we want to, we can sell here, probably book some profits down here, and then we'll see what happens. If we start to bounce from here, that would not be unsurprising, because if we go down here again and then suddenly the numbers start to improve, which I think they will do, then there's going to be a discrepancy between the real economy stock markets expectations. And if we would revisit all the way down to the low, that would probably be an indication that things are turning really bad. But again, there might be a discrepancy. There might be a situation where the economic data improves, but people are so fearful that they continue to sell. So keep a close eye on 22,919. Take out the low, we can probably go a bit lower. Let me see now if Anna is around. Because I don't have I can't see your questions, unfortunately. I'm not sure we're going to be able to talk about crude oil, but we will talk a little bit about it. So I can't see any of your questions, unfortunately, because I'm not an organizer. If you do have questions, by the way, you can always also just contact me. So I'm on Twitter at AlexFX00. And as I said before, I'm the chief market strategist at ATFX, and I'm also the chief editor at investingcube.com. And my email is alejandro.zambrano@atfx.com. I'm gonna see if Anna I can get a hold of her. So Anna's gonna check out the questions. Okay, she's just trying to see if she can get the questions. Otherwise, will just continue
All right.
here.
Thank you very much, Alex. I'm reading through your guys' questions. Let's see if I can.
You need to. I think you need to speak closer to the microphone.
Hello, can you hear me now?
Yes.
Yes, great. Thank you so much, Alex. It was great. I am going through all of you guys' questions.
Would you mind just taking a print screen and then just send it via WhatsApp to me?
Yeah,
And I can continue as well to share my screen. Alternatively, I think you can click on my name and just make me organizer.
Yeah, okay, that'll be easier.
Yeah.
By the way, someone asked, will I get this recording? Yes, you will. You will get it on an email either tomorrow or the day after.
Yeah, we're gonna do because it's gonna be a huge and long recording. It's gonna take some time to convert the file, but we're gonna upload it. So yeah, you should be able to. We will send it out, barring that we don't have any technical issues that we sometimes have. Okay, so I'm sharing my screen again. I cannot see the questions though. Let's deal. So I have your names. Well, I don't have your names, but we have your names. So we'll come back to you later and see if we can answer questions. I wanted to show you something. I don't think we're going to be able to cover crude oil, but I'm going to show you something. I want to just let you know that we do have two things I'm doing with Investing Cube. So if you did like this presentation, you like the way I present, the way I look at the markets, then we do have a premium course with Investing Cube, which is the site I manage. However, with ATFX, you can actually get this course for free. So what happens is effectively you just sign into your real account, and on your real account, on your client portal, you can see this course. So we have more info about that. You find that on Investing Cube, on Learn to Trade, and then Forex trading course is a 4-hour course. And what I did here, I did this last update last year, is that effectively what I learned over the years, I put it into one course. And obviously try to get rid of all the bad stuff. You try to show you the good stuff, what works for me and what's made me a good trader. We also do offer coaching as well, which comes for free with an ATFX account. So you can actually have 2 hours of coaching with me or any of the other analysts here at investingcube.com. If you don't want to change brokers and stuff like that, then you can buy both the premium course and you can also buy the one-to-one coaching. Also on investingcube.com, I do a daily market update. So this is the one for yesterday. And what I do here is I talk about the markets. So you can see here how it's live technical analysis. It's me here. And I talk about, it's more of a summary, not a summary, but you can, for example, the different ideas I share them with you and I cover euro dollar, pound dollar, dollar yen, crude oil, gold, DAX, and the S&P 500, and then also answer questions as well. And this is something we do as well for free if you want to get to know me a bit better. There's 2 ways of getting this to this. You can go on Daily Brief here. You can also just go to the ATFX YouTube channel and subscribe to us there. Okay, good. I think let's talk a little bit then about crude oil prices then, because we did say we we're going to talk about them. Because we still have 10 minutes left anyway until the next speaker joins. So what happened? What happened? Let me see here. So let's talk a bit about that big crash, right? There we go. So on April 20th, the May contract declined and turned negative. It was actually negative $40.39 per barrel. Why did this happen then? Why did we have that massive decline? Well, because when you trade the WTI index, which is called West Texas Intermediate, if you keep that contract at the time of expiry, you either have to, provide crude oil or you need to take crude oil. And what's specific is that this has to happen in a place called Cushing in Oklahoma. And traditionally, only 1% of all the futures contracts actually go to physical delivery. Well, this means that 99% of all the volume is speculators like you and me and everybody else that want to have a piece of the pie. So you have a huge imbalance there where speculators are far more than people that actually are genuinely interested to provide or buy crude oil. So what happened here is that you had the OPEC, first you had the coronavirus, right? Pushing prices down lower here from January. This is February, March. So prices go down and down and down because of that. Saudi Arabia says to Russia, we need to cut production because of coronavirus, demand is going to drop, and demand has dropped with some 30% or so of what we had last year. And the Russians said, no, we're not going to do that because it's just going to benefit the Americans. And OPEC and Saudi Arabia says, okay, all right, let's forget about our different agreements. We're just going to produce as much as we want. And not only that, I'm going to give my clients a discount of $6 to $8 per barrel. So whatever the benchmark in Brent crude, which is a different contract, by the way, whatever that price was, they're going to give them another 6 to 8% discount. So obviously, this contract collapsed and had a huge gap lower, and then trades lower and lower and lower. When we're here at $19, $18 per barrel, the retail investor says, and the normal later says, let's buy some crude. It's super cheap. And I don't disagree, it's extremely cheap. The problem is, though, that these contracts expire every month. So when people bought here, they didn't understand that by April 20th, they needed to book a gain or book a loss. But the market started to trade lower here, and people said, hold on, I am not making any money on my position, so let's just close out everything. And people closed out. And then normally you would have a producer there that would be happy to take your crude oil. But the problem is that everything needs to be settled in Cushing, Oklahoma. And in Cushing, Oklahoma, on April 19th, we already had about 60 million barrels in there. And that was a 76% capacity. So they're technically not at full capacity, which is 76 million barrels. They're not even at the upper range. So the gray area here is the previous 5-year range and average. So on average, on this time of the year, you should have some 50 million barrels. We had 60, and the upper limit has been some 70-ish, 65-ish, 65 million barrels or something like that. But we're not even there. However, these speculators, they need to have pre-arrangements to be able to take oil. You can't just rock up and say, oh yeah, I want a slice of that. And it appears that whatever was left was leased or otherwise committed. Maybe someone has a tanker coming in, or someone has huge production coming in, that they have leased that space, and that's why nobody could really take your contract. So in fact, they had to give it up for a drop. They had to pay to take your contracts away. Why did this even happen, for example? Well, I think in the US, it's a bit of a success that is coming back and haunt them. And the US has traditionally consumed far more when they were producing. In 2019, they actually produced more than what they consumed. But as far as I can remember, in the crude oil market in the US, they have some restrictions on imports and exports. So you can't easily just export crude oil out of the US. So what's happened in the US since then? Well, the number of rigs, which is at 676 or so in February, this is oil rigs, have declined sharply. And we're pretty much at, when I did this chart a few weeks ago, we're at 378 rigs. You can see here from a bigger picture perspective how we're coming back down to 2016 levels. But given as weak as crude oil prices are, I think we need to see rigs coming down even more. And this could obviously create a big problem for the US economy, because there's a lot of the high yield junk debt is issued by these crude oil producers. And that is something that we didn't talk about before, but that could create a problem, because you have banks in places like Texas and so on. If they have lent a lot of money to these companies, they can get in trouble. And that is a big issue. So what's going on here then? Why did OPEC Plus not work out that deal that they did? Because the International Energy Agency, they think demand has dropped by 9.3 million barrels per day, but the deal itself was for a 9.7 million barrels, and that's going to start from May. But from July, they're gonna pump up production again to just reduce by 7.7 million barrels, and then from January they're gonna just reduce from 5.5 million barrels. So long story short, whatever deal they're doing now, what they did, is not enough to counter the drop in demand, and they're going to start to ramp up productions already from July. So what needs to happen for crude oil prices? I think crude oil prices, we need to see some better deal ASAP, and then when things go back to normal, the price itself could potentially normalize. But I think for now, at least from a technical point of view, is a bit too early to be too optimistic on crude oil. So this is the June contract. That's what people are trading now. You can see that the price went from 6.6 to about 22%. This is a huge move, but you're still sort of guided by this wedge to some extent, and you're still guided by this big picture downtrend. So I reckon let it go up a bit, but then we're probably going to go down to 16 or maybe 12. Okay, I think that's it. I don't think I have enough time. I think we have a new speaker coming in and joining us. And just a quick summary here. You can follow me on AlexFX00. You can as well email me at alejandro.zambrano@ATFX or InvestingCube. We have as well the premium course. This is the way it looks like, for about 4 hours of content, classic chart patterns. You walk out with 2 different strategies plus a bunch of other stuff. And then we have the coaching as well, which you can learn more about on investingcube.com. Okay, Anna, I think I'm ready.
Awesome. Thank you so much, Alex. Yes, we're gonna pass on the command to our next speaker, who is Mark Owen. Mark has been a global educator and trader of the financial markets since 2010, bringing out the best from novice to experienced traders. As an international keynote speaker and educator, he's a specialist in his field and knows exactly what is required in order for you to succeed and grow your investments. In 2017, Mark founded Trade and Train from tradeandtrain.com, a platform that mentors traders through live market analysis and chart breakdowns. Subscribers have the ability to follow them the strategy shown, discuss trades with experts like himself, and receive strategic updates on the phone if they are away from the computer. So it's really accessible. I'm gonna pass on the screen to Mark, and he's gonna start his presentation. I'm really hoping that you all are enjoying and that you're learning and getting some insights of about what's going on at the moment. And again, if you have any questions, please do come to us, to either ATFX in general or to Alejandro, which is our chief analyst.
Hi, can you hear me, Anna, and everybody else?
I can. Welcome, Mark. Thank you so much for joining us today.
Oh, thank you for that introduction. Can you see my screen okay, you online trader?
Yep, we can.
Fantastic. Am I okay to carry on?
You are. Enjoy, guys.
Brilliant.
I'll leave you to it.
Okie dokie. Hi, guys. My name is Mark Owen. Great to be on this webinar today. I hope you're all well. I'm not too sure what your experience is with trading, whether you're all brand new or you have some experience, but whatever background, wherever you come from, doesn't really matter. So, yep, I am Mark Owen. I've been trading, well, I first started trading in 2009, and believe it or not, I was originally a car salesman where I used to live in Doncaster. It was a family business, working 7 days a week, lots of long hours. And yeah, I got into trading from about 2009 and I haven't looked back since. Absolutely love what I do. I love the freedom that it gives. You know, even if I go on holiday, I am trading, just take my laptop, etc. So that's why I got into trading, and yeah, like I said, never looked back since. And over the years, yeah, I've trained a lot of aspiring traders. I've been to South Africa, United States of America, I'm thinking Germany, Norway, Sweden, and you know, of course, the UK, where I am based. I had my first, yeah, my interesting story. I had my first $1 million client in 2012. And the interesting thing was that my first ever trade, I mean, when I'm giving advice to traders, I say, okay, never risk any more than 1% of your capital on any trade. And yeah, I got my first $1 million client in 2012. So the first trade I took, it lost, and it lost $10,000. That's 1%. Wasn't a great feeling, but luckily from then it went all okay. So yeah, and I'm a keynote speaker as well. I've been to a lot of different places, something called Show FX. You might not have heard of that, and Finance Magnets. I do a lot of speaking on trading. So yeah, and I just enjoy the freedom and just love trading in general. So we'll do a question Q&A session at the end. I'm sure we'll have time. You can ask me as many questions as you want to. So yeah, trading. So whether you are new, whether you're experienced, at some point, if you are going to, if this is really what you want to get into, and you know, like I say, for me, I have no regrets whatsoever. If this is really what you want to get into, then at some point you are going to need to create a trading plan, okay? So you need to understand which markets you're going to trade and when. We're going to talk about when in a couple of minutes, because we're going to talk about something called seasonality, which I don't know a lot of. Oh, bear with me, guys. I don't know a lot of traders or trading companies that talk about seasonality, but really, really interesting subject. We're going to talk about that in a minute. So, you know, in your trading plan, what markets are you looking to trade? Are you looking to trade all of them? Just the dollar pairs, cross pairs? Sorry, guys. What time frames? You know, do you have a normal job? You know, do you have a 9-to-5 job? Can you trade just the charts at the end of the day? Or can you intraday trade? Can you trade, you know, between 9 and 5? Sorry, guys, about these messages at the bottom. I'll try and get rid of that for you. Also, in your trading plan, how are you going to enter the trade? Okay, is there something you're going to be particularly looking for? Because in trading, there are quite a few candlestick patterns you can learn. Things called, some of you may know them, morning star patterns, evening star patterns. Engulfing bars, shooting stars. There are certain candlesticks and certain candlestick patterns you can look for in the markets at certain places, and that will basically give you an edge into, okay, this is the right time to enter a trade, or not, as the case may be. You know, and once you're in that trade, it's not just a case of leaving it. It's not just a case of, okay, you're in the trade, you've set your profit target maybe in your stop loss, then do you just leave the trade to let it either hit your stop loss or hit your target? Well, no. In fact, that is just the beginning. Once you're in a trade, for instance, let's just say you've got a 2%, a 2-to-1 reward to risk target. You know, if you're 1% in profit, would you want to leave your stop loss where it was, still risking that 1%? Or do you think it'd be wise to move it maybe to break even? Do you think maybe at 1% it might be worth banking half of the profit and then moving a stop to break even? You know, there's different rules that you can have in your trading plan once you're actually in a trade. So it's not just a case of placing the trade. If it triggers, that's it. There's a way of kind of maximizing the profit out of each trade and kind of covering your back, if you like, covering that risk. We risk initially 1%, but then we want to kind of decrease that risk as soon as possible. So yeah, know how to exit the trade prior to entering. Well, you'll have rules about that. Like I say, you know, will you be trading your stop loss, which is reducing the risk as price moves in the direction that you want to trade? Will you take 50% of the profits, you know, when it gets to a certain point? So, I mean, these are just a few points which would be in your trading plan. There's lots of other stuff too. I mean, there's a lot of other stuff. But basically, once you've got your trading plan written, it kind of becomes second nature to you, and you know exactly, you know, what you're going to trade, what you're looking out for. Once you're in that trade, you know what you're going to do with it, and it just makes things a lot more easier. And it's kind of robotic in a way. So, but that's good. You know, it's maybe a little bit boring, maybe, but you know, we put rules in place for a reason, and that's to make sure that we protect ourselves, protect our capital while we're trading in the market. So if anyone wants any questions about what should be in your trading plan, then just ask me at the end. There's plenty of stuff I can talk about for that. You know, just as an idea, you know, have a target for each day. You know, whether it's 1%, 2%, have a target for the week. What days will you be trading? Are you trading every day? What time frames? What markets? How much risk on your capital will you have exposed to the markets at any one time? You know, is it 1%, 2%? Have some rules. So let's have a look at the next slide. Exactly. Failure to prepare is preparing to fail. Famous quote by a guy called Benjamin Franklin. If we can have these rules in place, they're there to protect us, okay? Under any eventuality, if you are going to be doing this seriously, and I really do hope that some of you are, or some of you turn out to do this, because I absolutely love this. And it is, I was going to say business, it is a business. That's how you should treat it. It is a business. I love doing it. I love talking about it. But if you're going to do it, like anything, you know, do it properly. So, but that comes further down the line. For the moment, if you're new, not so important, but you know, as you get more experienced, you absolutely need to have some rules in place. So I briefly mentioned this a couple of minutes ago, something called seasonal analysis, seasonality. And I really don't hear a lot of professional traders or trading institutes talk about this, but it's a really interesting subject, and it's, how can I put this? It's an extra confluence to your trading decisions. So you'll find that certain currencies, metals like gold and silver, they will actually do well in certain months, i.e. their price will appreciate. And they'll also have months where they depreciate. Okay, so it kind of gives us an edge in the market. So, you know, we use seasonal patterns in the weather, harvesting, holidays, and elections. So yeah, actually this year, 2020, is an election year, and there are seasonality patterns in the markets for election years. I'm actually going to show you a few charts in a little while, because, you know, if you are trading at the moment, if you want to trade, there's some very, very interesting patterns going on right now, right at the start, where, you know, myself, the team that I work with, my traders, we are all in on these moves. Okay, but we don't just look at seasonality, and let's just say, I don't know, let's just say, for instance, well, we're going to talk about it anyway, the US dollar. In fact, we'll go to the next slide. I think it's on the next slide. The US dollar in May. Did you know that over the last decade, if you bought the dollar index, we'll just call it the US dollar, but the dollar index at the end of April and held it until May the 28th, you would have made a decent return. So basically, on average, more than average, it's about 90% of the time throughout the end of April to approximately the end of May, the US dollar index appreciates in value. So that would mean looking at selling the Aussie dollar against the US dollar. It would mean looking for selling opportunities on New Zealand dollar against the US dollar. Euro dollar, you'd look for buying opportunities on dollar yen, dollar CAD, dollar Swiss. You know, those are the major currencies paired with the US dollar. Is it really that simple? Well, is anything that simple in life? You know, if it was, then, well, if it was, then fantastic. But it's not quite that simple. Okay, I wish it was, but it's not. But having that knowledge gives us an edge in the market. And we also know beforehand, you know, we know, or my traders know, because we look at seasonality, I know that at the end of April, beginning of May, we should be looking for strength in the dollar index. Okay, so we actually know what to look for before it happens. Now, it doesn't mean that it will actually happen, but 90% of the time it does. So that's good odds as far as I'm concerned. So we kind of know what to be looking out for. So it is not that easy, but we know what to look out for. So let's look at a chart. This is the kind of seasonal chart for the US dollar index. So hopefully you can see my arrow. Just look at, it doesn't really matter whether you look at the blue graph or the yellow one, doesn't actually matter. But as you can see, both at the end of April, we reach a bottom. And then just at the end of April, we start to make a move. We have a little pullback, then we make another move, another little pullback, then a move, all the way up until round about, you know, the last week in May. We start to see the dollar index then change into a bearish sentiment. So yeah, analysis of the US dollar index seasonal chart shows that a buy from the 28th of April to the 25th of May has resulted in positive returns 90% of the time over the past 10 years. So that's really, really good odds to me. Really good odds. This was, or this is, the dollar index chart from yesterday. Okay, these are daily candles. So it's actually a little bit late in the move than what we're expecting, because we normally expect that dollar index bullish move to come in at the end of April, but it was slightly late. It actually started at the beginning of this week's market when it opened at 10 p.m. We started to see, and this was the daily close yesterday. Okay, we can see our trend line, our descending trend line, as price moved down, and then we can see yesterday we had a very big bullish candle, and we closed outside of, I call it a CTL, a counter trend line. And you can see that's actually what we call a bullish engulfing bar. That's a massive change of sentiment from sellers, as you can see, into buyers. And look where it happened. Previous area of support here. Now this candle here I think it happened on Friday, actually. If we look at the smaller time frames, I don't have them here, but on the smaller time frames, this broke to the downside. Okay, and a lot of inexperienced traders would have been selling that US dollar. But did we sell the US dollar? Absolutely not. The markets are very good at tricking retail traders into going the wrong way. This was a level of support here. We closed below it here. So, you know, inexperienced traders are going to think, okay, we should be looking for sales, but they don't know about seasonality. They don't know, you know, that the US dollar 90% of the time, around about this time of the year, goes up. Only 10% of the time, you know, is that wrong? So we were not tricked into selling the US dollar at that point. We just, you know, stayed out of the market. So we've had this bullish close now above this counter trend line, and we fully expect price to continue to rise as in the seasonality chart. You know, we'll be looking around the 25th of May, but certainly looking for price to come up into this zone here where we've seen previous resistance here, look. We'd certainly expect price on the US dollar to rise, US dollar index to rise up to, you know, roundabouts the 100.9 level. And that means looking for selling opportunities on certain currency pairs, Aussie dollar, Kiwi dollar, etc., and buying opportunities on others. But there are better dollar currency pairs to trade. Obviously, there's quite a few majors out of the ones I've mentioned, but are there better pairs to trade than others? Can we use seasonality to take this a little step further? So, okay, we're looking at buying the US dollar index. Cool. There's a few currency pairs with the dollar index in. So do we just like trade them all, or what do we do? Well, this is where we take seasonality a little bit further, because there are actually other currency pairs which we can see from seasonality actually have their own moves as well. So I'm going to look at pound now. You can see sterling. So look at sterling. So here's just about the end of April, and then look what happens throughout May on average. It basically sells off all through May. So let's get this right. We've got the dollar index on average goes up throughout most of May. We've got sterling, which goes down pretty much on average throughout the whole of May. So it makes sense to look for sells on sterling USD, pound USD, cable as it's known as well. Now, does that mean we're just going to sell pound USD? Okay, just because we've got all these probabilities saying, okay, this is what happens. Absolutely not. We don't just sell it. There has to be a technical setup. Seasonality is a kind of a string to our bow, if you like. But we have, as traders, we should have kind of certain tick boxes, and the more tick boxes that are filled, the better, because it means that we're stacking the probabilities in our favor. So we don't just sell pound USD. We look for price to make a pattern or to agree with seasonality before we enter a trade. So this is a very recent chart. In fact, I did this last night of cable, pound USD. So we've had this big impulse here. Hopefully, you may not know what an impulse is and corrections, but basically an impulse is a big movement in price in one direction. It could be to the upside, it could be to the downside. Okay, for instance, this is an impulse to the upside. We can see those big candles and that kind of direction. This is our correction, and then we have another move to the upside. So we have an impulse, correction, and an impulse. This is actually an impulse down, okay? And this here, this little pattern, this is a corrective pattern, which we would expect to break to the downside. So actually price here made what's called a double top pattern. So here, absolutely, we were looking, and we did trade this, sells in the market here. Okay, we're already looking for sells because of seasonality, but price came back, tested this previous area of resistance and sold off. So at the very least, we're looking for price to come back to the bottom of this pattern here. But because of seasonality, we're actually expecting a bit more of a bigger move than that. Now, it's always good in trading to look left when you're looking for target areas or areas of support or resistance to target or to trade to. Where are you looking to take your money from the market? Where do you want to come out of the trade? Where do you think this could kind of bounce, turn around? Well, look to the left. I've deliberately drawn this line here. Look to the left. We have this little bit of area of support here and here. Now, you may or may not know that if you look at charts, they often react around what I call big numbers. You will see it a lot of the time. Okay, so this here, although I've dropped it perhaps a little bit lower than maybe I could have, it's very, very close to the big number 1.20000. And I fully expect with that pound weakness we would normally see and that dollar index strength, for pound dollar to come down all the way down to 1.2, roundabout here anyway, and then was going to see what happens. I'd then perhaps expect it to reject, and maybe we'll see that to the upside. But I've got my plan, okay? The plan is that we're selling from here, we'll take off some money here, and then we'll see, does it break? And if it does break, we can add it into the trade. And then we're going to look to target around, well, I actually come out just before 1.2. I don't like to target right at the level. I like to come out just a little bit before. I like to be the kind of first man out of a trade, okay? Because anywhere around here, price could reverse. So I want to get out either before then, or at least trail my stop loss down and have it, really close to down here in case price turns around. But absolutely looking for further downside on pound USD. In fact, probably about 15 minutes before I came onto the webinar, so about 11:45, about 20 to 10, because I'm in the UK, Obviously, you guys could be, I'm not too sure where you guys are, maybe you're all around the world, but it was 20 to 10 a.m. here. The dollar just started to soar. It went up quite a lot. So seasonality is absolutely playing out. Just before I came onto the webinar, I saw that Aussie against the US dollar was sinking. I saw that dollar index was going up. I didn't get a chance to look at pound USD, but I'm guessing that it's pretty much the same. So seasonality is actually playing out as we speak. So it's actually a great time to be trading at the moment because everything is actually playing out exactly as expected. So, you know, me, my traders, we are actively buying this US dollar when we get the technical setups, and, you know, it's looking good. That's all I can say. It's looking good. So we looked at GBP sterling. Has the Australian dollar, does it have some form of seasonality as well? And well, we can have a look. This is the seasonal chart. Again, this is about the end of April. We're into May. Look what happens. We see sellers come in roughly to about May the 15th. You know, the kind of mid-May, we can see that throughout now, for the first 2 weeks at least, on average, 90% of the time, we see weakness in the Australian dollar. So again, we compare that off with US dollar. You know, let's be sensible. Let's trade the probabilities. 90% of the time, US dollar index goes up around about this time. 90% of the time, Australian dollar depreciates. So it makes sense to look for sells on the Australian dollar against the US dollar. Here's a very recent chart from yesterday, actually, of the US dollar. If you look at this kind of ascending triangle here, price was in that nice kind of rising channel, and then it broke out. So we don't trade. This was basically the first impulse to the downside. We fully expect with seasonality that Australian dollar against the US dollar will move further to the downside. But what's happening here is we're getting our first impulse of sellers. And right now, or right when this screenshot was taken, we're actually correcting. We're having a correction from this move because nothing moves. Nothing on the charts moves in a straight line. You know, on the different time frames, you'll see the impulses, you'll see the corrections, impulses and corrections. Retail traders, you know, unless you know what you're doing, they will get into, for instance, they will see this and they will start to sell, for instance, the Australian dollar somewhere down here. So where the best place to trade a market, maybe you want to make a note of this, I don't know. The best place to trade a market or get into a trade is at the end of a correction and the beginning of the next impulse. Okay, so as traders, we've seen this impulse, we've seen this correction. We are looking for the next impulse to the downside to begin. And that's where we want to enter the trade. So we actually saw overnight price broke a little bit above this resistance stroke supportive level. But just before the webinar, we saw the dollar index have a nice move to the upside. And we saw Aussie USD, this chart here. I saw on the H4 time frame, the 4-hour candle looked like a bearish engulfing bar, which is a great signal to sell the market. So that looks like, and I haven't looked at the charts obviously since the webinar, but it looks like the beginning now of the next impulse to the downside. So potentially today is a great day to be selling Aussie USD. Now I haven't seen the chart obviously since I joined the webinar, but it was looking what I would say pretty tasty. So today really good time. And I know that if my traders aren't in it already, I'll be giving them a trade setup to trade Aussie USD. We can also look at the New Zealand dollar, or it's also known as the Kiwi. So let's have a look at the seasonality chart, the seasonal chart for Kiwi. Again, May, look what happens. For at least, I would say, the first half of May, we see the Kiwi dollar depreciate. So again, we can, pair that along with the dollar index. So let's have a look at the chart. Is there a technical setup? What's the Kiwi against the US dollar actually doing right at this moment in time? Well, remember I was talking about impulses and corrections. Well, this is actually in this channel at the moment, okay? So we can see this low here. We can see our high, higher low, higher high. It's actually within this channel. It's actually had bounce from the top of this channel, which we would expect. We would expect it to at least come and test the bottom of this channel, at least. Okay, but we've had this impulse. We're looking for that next correction, and then we're looking to sell it back down to at least this level, but potentially it might come down and even break this pattern, because we believe this could be a corrective pattern. This could be our impulse. This could be our correction. We might actually see price move down a little bit. It might even come and test this low here, but we will target this zone first, and if it breaks down any further, then fantastic. But around this, look again, it's the big number, 6,000 or 0.6. When you're trading, guys, don't just look at the chart, okay? Don't just look at the candles. Look on the right hand side as well. Look on the left, for support and resistance, but look on the right as well. Look at the numbers, because price is attracted to big numbers. So, we're going to test 0.6 as far as I'm concerned, but I think we're going to come down a little bit further and test the bottom of this trend line. And then we're going to see what happens, because seasonality says that we would expect Kiwi to depreciate throughout the first couple of weeks. Well, we're only on the 5th of May, so there's plenty of time to come. And we're obviously expecting that dollar index to basically, appreciate in value until round about the 28th of May. So could be plenty of opportunity on Kiwi dollar, New Zealand dollar against the US dollar as well, to take short trades. So Aussie dollar, we're looking for shorts, looking for short setups. We're looking for short setups on GBP USD, and we're looking for short setups on NZD USD. I don't think I've mentioned it. No, I haven't mentioned it in this chart as well, but gold, if any of you guys trade gold is actually seasonally bearish as well around this time. So, we're looking to sell gold as well. So, seasonality is a really fascinating subject, and something which I like I say, rarely hear traders talk about. Maybe they just don't know about it, maybe it's never been brought to the attention. But the fact that you know about it, and you know that the probabilities, okay, it means that you potentially, it's almost like you're telling the future. You potentially know what's highly likely to happen before it actually happens. And, in trading, that is an absolutely amazing edge to have. So yeah, this is how we trade. technical analysis. It's all good and well having the, you know, seasonality telling us what we should be looking for and when, but without having the technical setup, there is no trade. So, you know, we'll look for those impulses. We'll look for that big price action in the direction that, you know, we think the market's going to go in. If it doesn't, then it doesn't, and there's no trade. But we'll look for those impulses. Okay. If we didn't catch the impulse right at the beginning, then we'll look for the first corrective pattern. What we'll do then is we will keep our eye on that corrective pattern, and we will wait for price to break out in the impulse direction. So let's just say Aussie dollar, we have the first impulse to the downside. We have the correction that moves upwards, so we see Aussie dollar appreciate, and then, you know, we're looking for signs then that that correction is over and the next impulse to the downside has begun. So in fact, I'm just looking at the US dollar against on my other screen, and it looks pretty good at the moment, actually, because it looks pretty good. We've had a really nice, I don't know whether you guys can see your charts, but we've had a very big bearish engulfing bar formed on the H4 candle between 6 a.m. and 10 p.m. UK time. So that looks really good for downside. That potentially looks like the next impulse to the downside is beginning today. So today potentially is a really good day to be entering the market for Aussie USD, potentially. But, you know, we have particular ways of trading. So, you know, there'll be a particular way of trading a bearish engulfing bar. If you can trade the smaller time frames, you know, which some of you might be able to do, you might want to drop to the 1 hour time frame or even the 15-minute time frame and look for an even better entry. Just depends on, you know, how much time in the day you've got. But even if you can only trade, look at the charts every 4 hours, even if you can only look at it, you know, the charts 20 minutes a day, there's always an opportunity. So, but, you know, the fact that you guys are actually listening to this webinar at this time, I'm not too sure where you are in the world. Certainly if you're in the UK, I would think that maybe you can intraday trade. So, you know, potentially be looking at Aussie dollar, but, you know, I'll be after this webinar, if my team aren't in a trade already, I'll be sending a signal out. I'll be looking to see how we can get into that market and take the most amount of money out of the market. So yeah, look for the impulses, look for the corrective patterns, look for candlestick patterns. There are lots of candlestick patterns, okay? But those candlestick patterns can tell us when we should be entering a market or not. I was talking about gold, wasn't I? I was talking about gold about 5 minutes ago. I didn't remember putting this slide in, but yeah. So I was talking about gold, and seasonally, we should be looking for sell opportunities on gold. This is a trade that was sent out yesterday. We know seasonally gold is bearish. And look at this price action. You can't see it up here, but we have our high. We have a low. We have a lower high and a lower low. Okay, that is a downtrend. So we'd be fully expecting, we've had a high, we've had a lower high. We're fully expecting gold to make another lower high before breaking to the downside and making a new lower low. So this was a chart sent out yesterday, 4th of May. You can see this is our impulse to the downside. This is our correction. This is our next impulse to the downside. This is our correction. I'm expecting another move to the downside. And look where we're targeting. This is where buyers came in before. In fact, it broke just a little bit below there. You can't actually see it because I've put this impulse versus correction on there. But so this is why we're targeting this area. This was actually a sell limit order. So I'm not sure whether you know what sell limit is, and we have sell stops. But a sell limit means that we're selling, we're expecting price to move up a little bit, and then we're looking to sell at a higher price than what price is at the moment. So price here is about 1701. And we were expecting price to maybe come up and into this 1708 area and then drop. And in fact, we got taken into the trade yesterday. It did. It came into 1708 and we got triggered in. We've put the high, so we put the stop loss above the last swing high. Because if it breaks that area, if it breaks that high, then we're wrong about the trade. You know, trading, you won't have 100% track winning record in trading. Nobody does. You will have losers. So it's important that you set a stop loss. I've known traders that trade without stop losses. Very, very dangerous. I've known people blow their whole accounts. So when you're placing a trade, make sure you put that stop loss in. Very, very important. So we're expecting gold seasonality to play out. And you know, we're looking for price to come down roughly to this 1665 level. And quite happy to take our money, our trade off at that point, and then we'll see what happens. Right, so today we are celebrating the launch of Signals in conjunction with ATFX. So combining the years of knowledge and experience, we bring trade setups directly to your device wherever you are in the world. So myself and all my senior traders, we have a Signal channel within what's called a Telegram group. We'll be sending signals out, trade signals, directly to your computer, your laptop, your tablet, your phone. And normally that is valued at $200 per month. That is purely because, you know, between my experience and the other traders' experience, we have over 20 years of trading experience. So our signals, you know, if we send a signal out, then, you know, we've sent it out for a good reason, put it that way. If you open a trading account though with ATFX today, you're just going to get that for free. You're not going to get charged $200 per month. You're actually going to get free trading signals from me and my team, complimentary. So even if you're brand new to trading, at least you've got, you know, trades to take if you want to. And all you got to do is this, is really, really simple. There's the email address, info@youronlinetrader.com. You have to email them today, okay? Tomorrow will be too late. This is for today only. Email using that email address. Put in the subject, interested, and one of the team will get in touch with you, okay? You'll be getting lifetime access to your online trader signals, normally valued at $200 per month. You're going to get it for free. What you're going to need to do is simple. Open a live account and trade with ATFX and your online trader. And you're going to get these absolutely free signals from me and other traders with over 20 years of combined experience. Basically, this is what the kind of thing you'll be getting. This is a trade sent out on, I think this was Sunday. I sent this one out actually. In fact, I sent both of them out. Euro dollar, trade idea, the currency pair or the asset, the time frame. Are we selling live? Are we placing a sell stop, a sell limit, a buy stop, or a buy limit? The entry price, stop loss, target 1, and maybe even a target 2 if we have target 2. So basically everything is there for you. I would actually never advise anyone to just take a trade signal without, having a look at the chart and make sure you agree with it. But everything is there for you. And this was the trade idea on gold, which I pointed out to you a couple of minutes ago. This was sent out. H4 sell limit 1708, and it actually triggered. It's actually running right now. So again, guys, this is today only, and I can't stress that enough. Tomorrow it will be $200 per month. Okay, and I'm not kidding. It's today only. You need to email this address if you are interested. And you've got to open an account with ATFX and your online trader. Trade with us. But once you email this email address, put your interest in the subject. Someone will get back to you, and they're going to go through the details. But really exciting opportunity, because right now, I've talked about that dollar. I've talked about seasonality on the US dollar index, Australian dollar, pound dollar, Kiwi dollar. Very, very exciting time right at this moment to be trading, especially Australian dollar against the US dollar, because there is a lot of pips to be made, and that could be throughout the whole of May. But this offer is for today only. So if you are interested, and I hope you are, just as soon as you can, just drop an email and get involved, because today is the best day to start trading. If you haven't traded before, I don't know, but today and this month is a really great time to start. Guys, thank you very much for listening to me. I am here for about 10 minutes more. So I am open to some questions. Absolutely. I've got to figure out actually how to read the questions, because I haven't used this software before. But guys, if anyone does have any questions, then make sure you put them in now. Let me see. I'm trying to just work this out. Bear with me a second, guys. I can see a little questions tab. Anna, are you there at all? I don't know whether Anna's there.
I am here. Thank you so much. Yes, I'm also going through the questions.
That's okay. Anna, where?
Yeah.
Yeah, I can't. I'm trying to look for the questions. Are there any questions for me? Can you actually see for me, and I can just answer?
Yeah, Michael is asking, are you only trading the 4-hour and daily time frames?
Okay. Thank you for the question, Michael. Personally, because I do this. This is what I do day in, day out. I have the luxury, if you like, of being able to trade all of the time frames. So, for instance, I can look, because I can what's called intraday trade. I can look at the earliest opportunities for that kind of change in cycle. So, for instance, if I'm looking for a sell, like I am at the moment on Australian dollar against the US dollar, I don't need to look at that 4-hour candle, because I can actually watch the 15-minute and look for that early change of cycle as we start to see the early sellers taking control of the market. So me personally, you know, if I have to go out or something because I'm, you know, I'm not in front of the charts all the time, or I'm not looking at the charts all the time, then I may have to trade a 4-hour candle. But no, the smallest time frame I go down to is 15 minutes personally. So if I'm looking for a trade in a certain direction, I'll look for that kind of first 15-minute change of cycle. But that just means that I get a better entry into the market. If you can only trade a 1-hour or H4 candle or even a daily candle, you know, that's cool. You can still make money. But the smaller time frames, obviously you can just get a better entry into the market, and that's what I try and do. But that's just because I have that time available. If you don't have that time available, then don't worry. You know, there's a time frame for everyone and what, you know, what personally time availability you have. So, but me personally, the smallest I go down to is 15 minutes, but that's just because I have that time available. But thanks for your question, Michael. Anything else, Anna?
Awesome. No, everyone seems happy and positive about the events so far, which is great. Thank you for
Guys,
telling
come
us,
on.
guys.
I've got a few minutes left. You can ask me anything, anything at all about
Yes.
trading. What do you need to know? You've got years of experience here. There must be some questions. So, you know, get them in. I'm here till, you know, got another 5-6 minutes. But yeah, I absolutely love trading. Just while waiting for any questions, just let me know, Andy, if anything comes in. But I absolutely love trading. I could talk about it all day if I'm honest about it. I just, you know, even if you're out about, you can just trade on your phone. And that's why I got out of that car business, working 7 days a week, long hours. With trading, you know, you've got that flexibility. You can work as many hours as you want to. If you want to work and look for opportunities all day, you can do, but you don't have to at all. Whether you want to trade the hourly time frames, the H4, the daily, it works. You know, whatever time availability you've got, trading can work for you. So, really exciting time at the moment to be trading. I've got to
Cool.
admit.
Seems like we have some questions, Mark, just last minute ones.
Brilliant, fantastic. Go ahead, Anna.
Nicholas, please excuse me if I didn't pronounce your name correctly, says, does the same seasonality trends apply in company shares?
Very good question. And if you want me to be totally honest, and I'm sure you do, I have never looked into that because I am purely a Forex, foreign exchange and commodities trader. So, I mean, there are websites out there where you can look at seasonality. I'm sure actually there probably is, but my honest answer is I have never looked into that, so I can't give you an honest answer. I only know because this is what I do. I trade foreign exchange and commodities day in, day out. So I'd love to give you an exact answer to that question. I can't, but I'm sure there are websites out there that will, you know, let you know that answer. So sorry I couldn't answer that one. I can answer it about Forex and commodities, but not that one in particular.
This is a very good one. Since you are all about education, Mark, you and your team, obviously, what would be the best advice for someone who is new to trading?
Okay,
this is
new
from
to trading.
Max.
Right, because a lot of people ask me about demo trading, yeah, you can demo trade for a little while, but to be honest with you guys, nothing is the same as trading with your own money, okay? Because there's a psychological effect of trading with your own money. If you were on a demo account, you will trade that different to your money. You know, you've got to believe me on this one. So if you're going to start on a demo account, fine. Do not leave it, you know, weeks and months, maybe a couple of weeks at the most. But even if you have to open a live account and start trading at the smallest risk, whatever that risk is, start trading with real money. Okay, so if you're new, maybe start with a small risk. I don't know what, it could be anything, whatever you're comfortable with. Never risk any more than 1% of your capital. Never risk any amount of money which you would lose sleep over, because I've done that, and I know plenty of traders that have, and I have had, in the early days, sleepless nights. I've had my laptop by the side of my bed with my open trades, and I'm constantly waking up and monitoring the positions, and that, that's purely because I risk too much money. So don't risk an amount of money what you're going to lose sleep over. Okay, and never risk any more than 1%. Also, set limits. Sorry, never risk any more than 1% on any one trade. Set a limit as well to the total amount of percentage risk on your account at any one time. So whether that's 1%, 2%, 3%, set, this should be in your trading plan. Have a limit, whether it's, let's just say 2%. So you can take 2 trades at 1% risk each. That's it. You can't take any more. That's cool. It means that you're protecting your capital. So my advice is to trade real money as soon as you can, but if you're new, start with risking, a very small amount of money until you're more comfortable with the markets. But trading money is totally different to trading a demo account psychologically. So try and get off demo as soon as possible. Keep your risk low. Never risk any money, an amount of money that you wouldn't lose sleep over. That is my best advice for a new trader that I can give.
That's great advice.
Anything else, Anna?
I don't think so.
Think like that. I'm not too sure whether you got another speaker now. Not too sure.
Sorry, say that again.
Do you have another speaker now coming up?
We do. We do have our head of commercials for ATFX, Marcos Tixolema, and he is going to take us through the platform itself and how can we make the best out of it.
Okay,
so it's a little bit more technical, but still necessary and important.
Brilliant. Well, everybody, thank you very, very much for listening. Thank you very, very much for your questions. Don't forget, the offer is for today only. So really exciting and a really exciting time to start trading. Thank you very, very much for listening to me.
Thank you, Mark, for joining us.
Thanks, guys. Bye for now.
Okay, thank you so much, everyone. Please keep your questions coming. We are reading all of them and we'll get back to you, to every single one of you, trying to help you and to solve them. We now are going to go through the MT4 platform and a little bit more about ATFX in general as a broker, with our head of commercials, Marcos Tixolema, as I said before. I don't know if you're there, Marcos.
I'm here, and thank you very much.
Awesome.
How are we doing, everyone? Hope that everyone is enjoying this masterclass. Good morning to everyone. It could be good if we interact. I know that you guys cannot speak out loud, but in the questions, if you guys can tell me what sort of your experience on MT4, just so that we can see whether we have more new people into MT4, people that have already experienced MT4, so that I can tailor-make a bit more the presentation.
Yeah, it would be great if you guys popped in your level of experience.
Yeah. So while you guys do that, I'll get started. Anna, if you can
I'm afraid we lost you there.
Can you confirm you guys can see my screen now?
No, not yet. Now we can, yes.
You see the MT4 platform?
No, we see your desktop.
Okay.
There we go. We see it now.
Okay, so I'll have to work on the smaller screen. All right, so what we're gonna do today is I'm gonna take you through some of the most typical questions that clients normally ask us during getting familiar with MT4. My name is Mark Stixilema. I'm commercial director at ATFX. I have over 10 years experience in the markets. At some point, I was always trading as well the market. I've been very interested in trading, and I've learned quite a lot about MT4. So what I want to do is share my experience with everyone so that hopefully I can save you some time and show you some tips and tricks around MT4. Okay, so first thing that I'm gonna show you is the main parts of MetaTrader 4. So everyone can see on the left-hand side, we have the Market Watch. So Market Watch is pretty much where all the instruments are available to trade. You can see some grayed out instruments and some ones on .eu. This is specific to ATFX. So at ATFX, apologies for this. So at ATFX, all the tradable instruments are .eu. And the ones that are grayed out, they basically you cannot trade them. So you want to find out those ones that have a color and then trade it. What I've done is I've selected the instruments that I normally like to have a look and follow, and I've put them on the top. You can customize this view as well. So one of the things you can do is if you right click on the mouse, you have this option to show all the instruments. So sometimes clients will not be able to see all the instruments available, and one of the reasons because maybe they are hidden. So if you click on show all instruments, that will make sure that all available instruments with the broker are displayed, and then you can see all the indices, shares, cryptocurrencies, etc. So that's one of the first things that I want to show you. The other thing is you can customize your view. So for example, all the charts that I have open down here, if I click hide all, it will only show the ones that I have charts open. So as you can see, everything else disappeared. Now I've customized my market watch and I only have the instruments that I like. So that's something that everyone can do and benefit out of this part. Again, say that later on you have an interest in any other instrument, you can always show all again, and then that will display everything again. Okay. Now, that's the market watch. Another typical thing that customers normally will find difficult, sometimes this window is not actually in there, and say by mistake they clicked and they close it, it disappears, and then people cannot find it again. So what happens is you've closed the window to give you probably bigger screen space, etc. On the top menu, you can find these buttons. So the market watch is this one. And one of the good things about MT4 as well is that if you hover the mouse across any of the buttons on the menu, it actually tells you what it is. But not only that, the cool thing is also you can see a shortcut on the keyboard. So for example, if you see Ctrl+M will bring the market watch back again. So if you spend a bit of time doing that, you can learn a few cool shortcuts for you to facilitate. So for example, if I press Ctrl+M, market watch comes back, Ctrl+M again, it disappears, and then it's just something useful to know. If you don't want to remember, if you find it hard to remember the Ctrl+M, you can always just click in here back and forth, and then it will appear or disappear. So that's on the market watch. All the instruments, you can move them manually. So for example, if I want to trade silver as well, I can move them in any order and drag them, for example, below gold, and I just leave it in there. I can do the same with any other of the available instruments, and I can customize my instruments. Okay. So same theory of Market Watch applies to something that is called the Navigator, which is this other window that we can see below the Market Watch now. So based on your trading setup, I don't know if you guys have, you know, like at the moment I'm working on my laptop, so the screen is not that big, it's about 15-inch screen. But if you have, for example, working on a 24-inch or larger screen, then probably the MT4 will also show better, and I'll be able to display a few more things. So for example, one of the things when I'm working on a smaller screen is I don't like having too many things open, especially if I'm analyzing the market. So what I'll, for example, tend to do is just close all the windows and then just leave the chart available, so it gives me more space to analyze. So remember that you just always can come back to the Market Watch if you want to open a trade, or the Navigator. So the Navigator will be the second part that I'll be showing you today. So what's the Navigator about? So the Navigator, normally you will be able to find the account that you're trading on. And for example, in this case, I have a demo account and it gives me the account number. So you can have different accounts in here saved and set up for you to trade. So say you have 2 or 3 accounts for different strategies with different balances, you can have them, and then you can switch the login by just double clicking in them. And as well as having control of the accounts that you are working on, it also tells you the indicators that you can find, and also tells you expert advices that you have available and scripts. Now, if you're new to the market, you might find like difficult to understand, okay, what's expert advisor, what's a script, might sound confusing, or indicators. But if you've been in the market around, or you've been doing some research, you will it will potentially make more sense to you. Indicators, we'll cover that in a minute, and I'll roughly explain what's an expert advisor and a script as well throughout the presentation. Okay, so that's the Navigator. Again, you have a shortcut, Control+N, appears, disappears, or you can just click in here. Okay, next is the terminal. So the terminal is super important and is down here. So again, there's a Control+T shortcut, or you can click in there or unclick. Now, this is where you have all your orders. So for example, at the moment I have a buy euro-dollar order open, which just opened a few minutes ago. You can see 12:44 platform time, and it's in profit, which is good. So all the orders that are open will show you normally under trade. You can also see the account history in here, so all the previous orders that you have done throughout the week or the month or since you started trading will show in here. And what you can do, for example, is right-click in any of these space where it says account history first, then right-click in here, and then you can show all history, last 3 months, last month, or you customize your period. So for example, all history, and it will show you all the orders that were previously done, including balance, etc. So that's what's happening on the terminal side. You have a few other tabs that gives you like the exposure. So for example, if you want to see what's your exposure on this particular trade or number of trades that you have open, then you can see, for example, the biggest exposure is on euro-dollar, and it's a long position. You also have some exciting thing which is called news. So for example, if you want to see latest news on the market, this is the tab on the terminal where you can go and see, for example, euro-dollar slams after Germany constitutional court ruling the ECB QE. If you want to read more, just double click on the headline, and then we'll open another window which will allow you to read more. Now, next one will be alerts. You can have alerts based on alerts that you've set up, mailbox, any incoming messages from the broker, market. This is MQL markets where you can, acquire like signals or other expert advisors. Some of them are for free. Some of them MQL will charge you. So then again, in articles, you have different articles that other traders are sharing. Codebase is where you will find expert advisors, indicators, or any scripts. Again, there's a large library and database available in here that you guys can just download for free and install. And same with experts. So it's a sharing community. So MQL has done and allowed this on MT4 to happen. So you can have different sort of indicators that are compatible with MT4 to aid you with your trading. Now, indicator, it's basically just a tool that will allow you to understand what's going on in the market. Different type of indicators, for example, an indicator that tells you what the actual spread at the moment is, so indicator that will tell you a signal whether it's a bullish market, for example, if it's time to buy, or if it's a bearish market, if it's time to sell, things like that. Experts, and then again you got the journal. The journal is where everything is recorded about your activity on the account. Okay. So any questions up to now? Let me just quickly stop and see your questions. If
Marcos, someone was asking us before about ATFX in general and whether we charge any type of commission, what's the minimum deposit and all these things. I am assuming it's a beginner and they would like to find out more about us.
Sure. So ATFX. So I'd like to cover that part towards the end of the presentation on MT4 about different account types and how ATFX can help you and contribute towards your trading journey, from taking you through educational material, one-to-one coaching, and other cool stuff that we have available for our clients. So I'll come back to that question at the end, Anna, with regards to
yeah, sure, that's great. So guys, if you have any specific questions about MT4 and how to do specific things that you're struggling with at the moment, or that you just simply like to know how it's done. I know some of you also use MT4 on your mobile phones, which is great as well. It's just a matter of preference, really.
I see that someone is asking if this mastermind class is recorded and whether they can watch it again, Anna.
Yeah, definitely. We said it before, we keep saying the whole event is going to be recorded and it's going to be sent back to you guys as soon as it ends. Probably by tomorrow, because we need to produce it and everything. But for sure, so guys, don't worry.
Martin Rollins, Maxine, and Terry have shared some of the experience. So I can see limited experience, starting being around 6 months and learning the hard way. So thank you for sharing your experience. I'll keep adding to add more to your knowledge based on this. Okay, so now that we've covered the terminal, again, you can close it in here, make it appear back by clicking in here, or the shortcut Ctrl+T, right? So that's we've covered some of the main windows. So Market Watch, Navigator, and the terminal. That's why you need to manage and control your positions and to see on which account you're trading. Now, let's move on. Okay, so what about charts? How do I open a trade, ticket order, and other cool things on MT4? So charts, you will see my chart looks cool, or at least I like to think that it looks cool. It's nice and colorful. These are the colors that I prefer when analyzing the market. You can personalize your chart. Normally, when you open a brand new chart, MT4 will show you like this. Okay. Now, this is the default chart, and you can customize the chart as you wish. And all you need to do that is right-click and go to Properties. Now we'll start showing you properties about this chart. And this is where you know, based on your likes or based on your preferences, you can customize this. So, for example, the background is black. If you click on the color, you can make, for example, the color that I like, and it will go that color. If you like working on black, you can leave it in black. So I'm gonna leave black for you guys to have an idea of a different template or a style of chart that I also fancy. So the foreground must be black, because if the background is black, you need the foreground to be white so that it works. But then one of the things, for example, we like to think that the candles, when the market is going up, are gonna be green. But if the market is going down, they need to be red, right? Because it's sort of losing value. So we're gonna go to the bar down. We're gonna change it. So as you can see, like background, foreground, etc. So let's start by removing the grid. For example, I don't like the grid, so I'll just say none. That makes the chart a bit cleaner. And then carry on editing this. We can say like the bar down needs to be a nice red. You start seeing, if I zoom in here, you can start seeing that it starts taking a better shape. And as a default, is showing me bars, but I want to see candlesticks, for example, because I prefer candlesticks for the viewing or and analyzing of the chart. Now I can see this looks like this, but it has a white body and a black body on the bullish and bearish candle. So I'm still not happy with this. I want to change it. So for example, where it says bear candle, I want it fully red. So I'm going to change that white to red. And where it's up candle, so bull candle, then I'm going to change that to green. Okay. And then say okay. And now the chart starts looking much better, at least based on my likes. You would agree or disagree with me. But that's how you basically start personalizing the chart to the way that you like. For example, this back foreground is white. People that follow, for example, Bloomberg will like it if, for example, you put it orange, might look a bit like Bloomberg charts, etc. So this is based on customer preferences. You can adjust the different colors. It's all about, you know, just seeing what they are. For example, you want a grid, you can add it. The bars up, down, etc. Volumes and so on. So I'm not gonna spend too much time because I know I'm limited with the time, and I want to share a bit more with you guys during today. Okay. So the other thing that you can do on properties is select whether it's a bar chart, candlestick, or line chart. You can show the ask line. So what's the ask line? So if you are new to the market, every instrument has a bid and an ask price that you can see in here. So if you want to show the ask line, you can also click in there, and that will basically show you the distance between the bid and the ask, and then you sort of have an idea as well about the spread. And if I click OK, that should show. So for example, now the ask line is showing red in here. Okay, so that's personalizing the charts. Okay, so let's say that you've done an hour of good work. You personalize the chart to the way that you like. This is looking very artistic, and you're like, yeah, I'm happy with this chart. I want to trade like this. So do I have, now I'm gonna open a chart for GBP, USD, or cable, and then you need to start all over again. It will be very time consuming, and you'll be like, oh no, I need to start over again. So there's one thing in here that you can do, and it's basically, you're gonna save this as you like. So right click on the chart, in any of the empty spaces, and then click and select template, and then you're gonna click as save template. So for example, say I'm happy with this, I'm gonna select and save template. I'm gonna call it today Mastermind webinar. I'm gonna click on save. That's it. So the new chart that I opened, GBP USD, is looking like this as a default. If I right click on any of the black space on the chart and I go to templates, and I'm gonna select the one that I just saved, which is Mastermind webinar. Everything that I saved for my previous chart now applies automatically, directly, all the look, the feeling, the color to the GBP USD. So now you can see I have this, which is the one I started with, and I also have this sort of layout. Okay, so that's how to save your charts. Once you make some adjustments, you personalize it to your style. Make sure you save them to save you time next time you're opening new charts. Okay, so moving on, working with different charts. Gonna get rid of the market watch just to show you this because this screen is not too big. And then I'm gonna arrange the windows. So another feature on MT4 that I wanna show you is arranging windows.
I think we lost you there, Marcos.
So I'll repeat again. So another feature. Anna.
Yep, great. Another feature. Yeah.
I think I lost connection for a short period. So, okay, another feature that I wanted to show you is arranging windows so that if you're analyzing different instruments at the same time, you want to be able to track what's happening on euro dollar, what's happening on USD JPY, what's going on with the FTSE 100, etc. You want to have different windows, right? So now this is based on your screen size. So if your screen size is big, you can have as many charts as you want. And what's more important for the trader is to have charts that will allow you actually to see what's happening, right? So for example, at this stage, this is too much for me. So I'm gonna get rid of a few of them. So for example, I'm gonna get rid of USD JPY. I'm gonna get rid of say US UK oil. And I'm just gonna leave, say, 4 of them. Let's close this one. Okay, so now I have 4. So now obviously I have empty spaces in between the screen. If I click again this, now it's automatically gonna arrange the charts for me. So now I have 4 charts: euro dollar, FTSE, gold, and cable. And now I can see everything that's happening across these instruments. For example, if I have position in euro dollar, I know that the market is above my entry level. So I'm okay, I'm monitoring that. Trading on the 5-minute chart, this is super important. This tells you the time frame where you're trading. I'm looking at the 1-hour gold, but for example, say I want to change to daily, I just click on the chart and change the time frame period. So this part over here that you see on MT4, it's also something that is super important. So this is the time frame of the chart that you're looking at. So for example, this 1-minute chart, 5-minute chart, etc., right? So 15, 30 minutes, and it goes to 1 hour, 4 hour, the daily chart, the weekly, and the monthly. Okay, so normally I like to see what's going on the daily as a guide point, unless I have position open. So the only one I have position open is on euro dollar, so I'll keep it on a short time frame. The other ones, I just want to see what levels they are trading and whether there is any potential opportunities upcoming. Okay, so that's in terms of time frames, arranging the charts. One other thing that I want to show you, for example, is if we go back to one chart only. So for example, you're looking at this, but sometimes you want to look at a longer time period because at the moment it's only going to the 5th of May, 2020, if you can see down here. up to now. So when you're analyzing, sometimes you want to look at data that is older than this time frame, so you can zoom out of the chart, and then eventually we'll make the candles smaller, and you can also go back in a time period. So, for example, if I show you this on the 1 hour chart, now we're going back to 14th of April, and that's the trajectory of the instrument. So it's been downtrending, reached this bottom around 107 level, and then back to uptrend up to here. But remember, this is 1 hour, so normally you will want to look at the bigger time frame periods to see what's actually the major trends. So I'm not gonna show you how to look for the trends, but I just want to show you the functionality of zooming closer to the candles or zooming out to look at bigger time periods. Okay, so another thing that the MT4 platform has is something that is called indicators. And I'm briefly gonna cover that because I know I'm running out of time. But indicators, for example, you can see that I've drawn something on my chart. This is called a Fibonacci level retracement. So just quickly gonna show you where to find them. So for example, you can go to insert, and then you have indicators, and then you have a list of indicators that you can use, from trend indicators. So obviously the name gives you a bit of an idea. It's to find trends, oscillators, volumes, etc. So the one I use was a Fibonacci retracement. So for example, I go Fibonacci retracement and click. Then I take from the highest point to the bottom, and I draw my Fibonacci level. And basically this is drawing the Fibonacci levels that potentially the market is going to retrace, right? So I see this is the bottom. The theory says that I could go to 38.2, 50%, or even 61.8. So what I did is basically just go long on Eurodollar in a very short time frame, and then I've already have take profit order around the 50% level. And this could happen as it could not happen, and it will go back and take me out on my stop loss that I have down here. Now, you see that my potential loss will be 29 euros, but my potential win will be 65. So a bit over 2-to-1 ratio in terms of my profitability. So if this order goes ahead and takes me out, that will be good because I'll be taking twice as much as what I'm risking. So I'm sure we can help you on risk management as well for that after the presentation with other educational material that we have. So that's gone super quick. Half an hour probably was not enough, but I hope that I managed to share with you guys some of the most important things around MT4. What I'd like to bring your attention now, it's ATFX. So we are based in London and regulated by the Financial Conduct Authority. We are proud of ourselves in terms of adding value to our clients. So what we've done, we have a YouTube channel, it's called ATFX UK. I'll invite you to subscribe and follow us. Under subscribe, you have like a playlist that has been designed to aid our customers, and you have an MT4. You have an MT4 playlist, which is in here.
Hi, Marcos.
Yeah.
Marcos, thank you very much for the presentation. I'm sorry to interrupt you because we are running a little bit out of time to jump into our next presentation now. Thank you very much for presenting the main features of the MT4 platform. I'd like to remind all the participants that the MT4 platform of ATFX is also available in a web version, as well as mobile phone and tablets. For those that use Mac, please be advised as well that you can use the platform with a VPS, which is offered in free of charge in one of our trading accounts. If can I please just have the confirmation from Anna that we are ready to jump into the next presentation with Ken. We will be showing us how to trade the fundamentals which are causing how to trade pretty much fundamentals which are causing volatile market conditions at this moment.
Right, that's correct. Thank you so much, Marcus, and thank you so much, Pamela. Pamela,
just to finalize, if anyone wants to know more about MT4, you go to our YouTube channel and look for all the MT4 tutorial videos that we have over there. Have a great morning, guys. Thank you.
Thank you, Marcos. Yes, of course. If you guys have any questions or just want to find out more about the platform itself and how to use it and how to become better at it, at ATFX we take pride of taking care of you guys and our clients and your education. So please do not hesitate to contact any of us or just pop in your questions. I'll make sure that we get back to you individually. And yes, thank you, Pamela, for your reminder. Now we are going to jump into Ken Chigbo's presentation. Ken, do not kill me if I didn't pronounce your name correctly. But yeah, Ken is going to talk about fundamental analysis. Ken has over 10 years of exposure to the financial markets. He started his career as an analyst, covering a variety of asset classes, forex, fixed income, commodities, and equities. After gaining such invaluable working knowledge, Ken decided to make a move and commence trading on his own. And he's also the founder of a new generation financial media service known as Freak Network, covering fundamental and technical analysis. You can find Ken on Instagram. I personally am obsessed with his Instagram account, CanFX Freak. I'm sure he's gonna, pop in the link somewhere or this, the handle somewhere. And I see you, Ken. I'm gonna give you.
Hey, morning.
I just have a question for you, Ken.
Yep.
Are you lit?
I'm always lit. Always lit, baby. Always.
Okay. I'll leave it to you then.
I'm just
Enjoy, guys.
Let me just share the right screen. Bear with me one moment. Okay, so screen share. Here we go. Okay, can you see the slides?
We can see your desktop and it says, hello, Ken, confirm your account.
Oh, no, that's the wrong screen. Okay, bear with me one moment. Sorry. What I could do, I'll just move everything up. It's fine. Just because one moment. All right. Can you see me as well, by the way?
Yes.
Okay, awesome. Boom. Okay, can you see my screen now? The slides?
We can see your slides, yes.
Wonderful. All right, let's get started. I thought it'd be worth at first introducing myself because obviously not everyone knows, but thank you very much for your introduction. In terms of myself, I've literally been in the fun world of financial markets since I was 18 years old. Why so young? Well, I was actually lucky enough to get an opportunity as a runner. Okay, I was a runner on a proprietary trading floor. Okay, a company back in the day known as Schneider Trading. So as a floor full of prop traders, and I was getting these traders their breakfast, their lunch, their dinners, dry cleaning, everything, you name it. I was just doing that, and I did that every sort of summer holiday that I had, or even just general school holidays, time off education. I was there, just absorbing everything that's going on. After some time of showing a lot of tenacity and hunger, I was able enough to get a opportunity as a junior analyst. Okay, so as a junior analyst, my role was to sit in front of, with a team of other analysts, sit in front of like 30 screens. Okay, 30 screens digesting everything that's going on in the markets, and our role was to provide the fundamental news, the fundamental analysis to these traders. They knew the technicals, that's fine, but to then keep on top of the fundamentals as well was another task. So that's what our role was. So every move that you're seeing, you know, euro spiking 50 pips here, GU popping higher or lower, whatever the case may be, we were finding out and delivering the information to them, and at times, you know, anticipating moves on the back of reports that we were reading. So anyway, I did that for about 4 years, then went into foreign exchange broking, helping big companies manage their forex exposure. So any importers, exporters, I was helping them time it right because I knew the sort of the fundamentals. So I was just trying to help them get the best rates of exchange, so on and so forth. After some years doing foreign exchange broking, I then took the decision to then leave the world of the corporate world and start trading on my own. Worked quite closely with a company called BlueFX, and then just literally was off on my own. I was free. I accumulated enough funds to do so, and I started trading by myself. So that's where I am today, and I run I call it a media service because we provide a lot of financial news flow, everything that's going on in the markets, making it fun and sexy. So look, that's enough about me. Let's jump into this presentation. And what I wanted to talk about here was, we're going to go through a few chart examples, etc., but more so just for anyone that wants to take some notes in terms of, you know, really understanding fundamentals and talking about some of the current themes that are influencing the currencies or the indices or whatever it is you're trading today. So that's what we're going to go through here. All right. So the first point, underlying themes of currencies. Guys, as I'm sure some of you are aware, maybe not all of you, but there are themes that are influencing the currencies that you're trading, these underlying themes, like, you know, I'm going to go through some of them, but these are what's influencing, you know, the rates, okay? Whether you're looking at EU, euro dollar, whether you're looking at GU, GBP dollar, there is going to be something fundamentally underlying that's helping price action push it to the north or to the south, whatever the case may be. Okay, that there'll always be something underlying there. And then we've got risk on trading. So this is a type of tone in the markets. When we have risk on trading, market participants want risk appetite. Okay, this would have been triggered by a certain theme or a piece of news. Okay, so when markets want risk, you know, you're looking at in terms of buying stocks, you know, indices should be higher. You're looking at in FX, riskier FX, we're talking about AUD, NZD, CAD. You know, these are commodity linked currencies seen as riskier currencies. You're looking at GBP as well. You know, all of these would, when there's risk on trading, when market sentiment is good and buoyant, you'd be looking at seeing strength in those. And when a theme is underlying, what you'd see as well, because that is driving the trend of the price as well, you will see, so say as an example, I'll go into specific ones that we're seeing right now, but as an example, GBP, you know, we're going through a great period of data, good economic data we're seeing. So GBP's trending to the upside, dips are being bought. So we sell, dips are being bought, sell, dips are being bought. So long as that theme is still there and existent, that will continue to support that fundamental push to the upside for GU. Okay, so that's risk on trading. Risk off is opposite to that, you know. So with risk off, typically, you know, when we're talking about risk off, maybe there's some political tension, geopolitical, natural disasters, a host of things. And in that case, you would see, in terms of your safe haven currencies, if we're looking at FX, we're looking at yen, we're looking at Swiss franc, we're looking at dollar. Okay, in terms of precious metals, gold. Okay, gold has historically tended to do well in times of crisis. And then you'd see, you know, weakness in the riskier FX, AUD, NZD, CAD, so on and so forth. All right, now, obviously we have sessions, and I've just generalized it: Asia, Europe, US. Typically, when I'm talking about themes as well, again, I'm going to go into specifics shortly, but when I'm talking about themes, these are set from the Asian session, right? So Asia, obviously the first to the markets to open in Asia, and then that's followed suit in Europe, UK, London, and then again New York. Okay, so Asia, typically there'd be a theme there, that or you know, a tone, market sentiment. We understand what that is from Asia. And then as we start to transition into European session, Europe will want to play catch up with Asia. Okay, so stocks in Asia may be higher. The yen may be weaker because we're seeing risk on trading in Asia, risk sentiment for whatever reason. So then what we might get between Asia and Europe, and this is something that you can back test and something that I'll go through another time because it's a lot more detail. But what you may typically tend to see between the sessions, between Asia and Europe and London playing catch up with Asia, is you might see a little bit of you know, consolidation, and then like London flow coming in, and then a resumption of that trend that was set in Asia. Okay, same will happen then between the Europe and US. As US starts to join Europe, you'll start to see a bit of consolidation. And again, let's resume that theme that had been set in Europe and in Asia. Okay, so it's understanding that, and you can go through and look at examples of that. Well, we'll go through and look at examples of that. Reading major news wires. Okay, now how do we get to understanding of these themes, everything that's going on? These are all in the papers, guys. Just to give you an example, some examples, your classics, you know, CNBC, Bloomberg, Yahoo Finance, all of these guys write nice little digestible updates on what's happened in the markets. You know, you can, if you're logging on in Europe, you know, whether you're up at 6 a.m., 7 a.m., there'll be nice little bite-sized bit of information on what's happened. You know, are stocks down? Why are they down? Is dollar up? Why is dollar up? So on and so forth. So those will all be given to you there. It's there. It's just about you reading that, digesting that, and forming a bias. You know, if that then matches your technicals, the analysis that you've done technically, boom, fantastic. You've got another confluence, not just technically, you've got another confluence now fundamentally to back your view, because you've seen this has happened in Asia. Great. We're likely to see this continue now as we head through to Europe and potentially into the US session. Okay, so picking out those major news wires, as I say, just the classic ones. Check out Bloomberg, check out CNBC, check out CNN, check out Yahoo Finance. They all write nice, digestible updates on what's going on in the market. And then, as I said, form a bias. All right, let's talk about the current market themes. All right, I'm not going to go on too much about coronavirus because, you know, we've heard a lot about it. I'm not tone deaf to the situation. Let's remain positive. So coronavirus obviously is said to originate in China. It's spread globally. Okay, now with this spread globally, it's caused a lot of economic contraction on the back of government shutdowns. Right, there hasn't been normal output. Okay, so with that being said, we have seen, you know, we have seen the theme in the markets of safe haven flows. Initially, when that was all kicking off, you know, stocks were getting hit hard. We're seeing big flights into JPY, a scramble for dollars, which I'm going to show you on the chart as well. A scramble for dollars because the dollar is the reserve currency of the world. It's the most used, it's the most liquid currency. Everyone uses dollars. You know, every business transaction you see, a bit of M&A or, you know, whatever, people are buying and selling in dollars. So, you know, that with that coronavirus situation and the damages, we saw a big amount of safe haven flow initially. We've tailed off a little bit because that takes on to the next point of easing of lockdown measures. So that gave a bit of sense of optimism again for the markets. You would have seen last week as a classic example of that, actually. Last week when a number of governments, likes of Australia, were easing lockdown measures, New Zealand announcing those, Germany easing some restrictions. You would have actually seen that week the dollar particularly underperformed. Okay, we saw quite a lot of weakness and a big amount of outperformance in riskier FX. AUD was pumping, NZD was pumping, Euro was going for it as well, GBP, a fairly decent rally there. So that easing of lockdown measures is another theme. It's helping drive risk appetite, risk on trading. And then look, another thing, and this is why market conditions are so choppy and volatile at the moment, and you've got to stay up to date with what's going on. US and China, this tension cropped up again. It was something that was happening throughout 2019, right, with the trade wars. Okay, with the trade wars, when that was going on, we were seeing flights into safe haven. Gold was loving it, all this geopolitical tension between those two. So these have sort of hit the surface again. Okay, Trump threatening China with additional tariffs because he believes that you know, the virus was something that China concealed, that it happened in a lab. You know, these are all sort of his own theories, and which have seemingly been played down quite a lot overnight. But that was something that's worrying markets, and is likely to be there as a threat now. Okay, it's a theme that will remain there because markets know what Trump's like. He can just switch like that, and then again we've got the big flights into safe haven again. And that was something, if you would have seen on Sunday, just to and I'll show you on the chart in a moment, but on Sunday at the open, Sunday just gone, you saw a massive scramble for dollars yen. Okay, big flight into dollar safe haven because of these threats and intelligence reports suggesting that, you know, accusing China of you know, concealing the virus and stocking up on medical supplies without exporting them. It just raised tensions again, and the threat of tariffs from Trump. And then another current market theme, one that's subsided a little bit, but there was a period when you know, for example, the FOMC, the Central Bank of the United States, okay, they were looking at measures to try and cushion the blow from the impacts of coronavirus. Okay, so, you know, stimulus, pumping money into the markets, quantitative easing, right? Giving banks all this cheap money. Okay, this cheap money. So banks take that. Yes, I'll have a bit of that. It's costing me nothing. Great. The banks are then encouraged to lend to you and I. So we take that money. Thank you, banks. Let's go and spend, and try and continue to stimulate the economy and cushion the blow. But with that, initially the effects on the respective currency with whatever central banks conduct, in this case the FOMC, we would see dollar weakness. Why? In a nutshell, explanation is they're just pumping a lot of dollars into the market. So with all these dollars floating around in the economy, of course, you're diluting the dollar's value. Okay. All right. So let's take a look at some examples on the charts. I just want to show you, give you an idea of, you know, how a theme can have such a drastic impact on the markets. Luckily, well, not luckily, obviously I've got a good example here with what happened with the coronavirus situation. So let me just, all right. One thing I want to start off here, talk about is bonds. Okay, what are bonds? Bonds are, in terms of the asset, they're classed under fixed income. Okay, a fixed income for a certain amount of investment, and you're given a yield on that, your return for investing in that bond. Now, why do people invest in bonds? Well, because they want somewhere safe to put their money. Okay, historically, bonds have been proven to generate or provide a steady return of investment. Now, when do bonds tend to perform well? Bonds tend to perform well when there's crisis. Any crisis in any economy, any natural disaster, bonds perform well. Okay, there's a high demand for them. Now, as I explained, I've got here, this is the 10-year yield on the bond, on the US 10-year. Oh, excuse me. This is the 10-year bond. Okay, and what we're looking at right here is the yield on that bond. So the yield, as I said, is the return that you're going to get for investment. Now, I want to go, look, let's take here, okay, in January 2020, yields started to break out and fall quite drastically. Why? Okay, let me leave I'll come back to the actual reason fundamentally as to why, which you probably know, but let me go to reason why yields fall. Yields are falling at the end of the day because everyone's piling into that bond. Everyone wants this 10-year bond. They're scrambling for it. So the yields are plummeting. They can't keep offering a high yield if there's a lot of demand, right? There's a lot of demand, so the yield's going to come down because it's everyone's piling into it. So that's exactly what we saw here. So in January, if you remember rightly, it was like mid-Jan. And we started seeing a lot of attention being gathered by news wires and the markets, realizing that, oh, you know, this coronavirus is spreading quite drastically in China. And now we're actually seeing cases pick up in Europe, UK, you know, other parts of Asia, the US. So that's why investors gradually started scrambling and putting their money into bonds. So the bond market is a really good way initially, as a good starting point to look at, to gauge an understanding of how you know, investors, market participants feel about a respective economy. If we look at yields and they're falling, you know, there's potentially a bit of panic in the markets because everyone's piling into bonds. If yields are generally higher, okay, higher than obviously where they are now, then situations tend to be calm. If they're too high, you think, why is a country offering high yields on a bond? Because they're risky. Okay, you would have seen that with a lot of European, you know, countries like Greece, Spain. They offer higher yields because they're more risky. Okay, so as I put it as a note here, investors seek safety as coronavirus cases start to rise, spreading from China to other parts of the world. So yields were falling. We actually hit record lows on the 10-year yield for the US on that panic, and people were actually going, because the yields got so low in the US, people were even going to the 30-year bonds, you know, 30-year investment. That's how worried markets were getting. Okay, that's a sign of a crisis. Let's show you then, and the next thing to look at, you want to be looking at, is stock indices. Okay, so let's stick to the case of the US, and here I've got obviously the well-known and very traded Dow Jones. Okay, so the Dow Jones DJI. Here again, this one was a bit of a delayed reaction. So it started in stocks in bonds first, and then the panic started to come into the stock market. Okay, you start to see prices losing ground here, you know, and then the momentum really picking up. Why do we come out of stocks? It's a riskier asset, right? People want the cash. They start closing out. You know, at the end of the day, there's this economic contraction. Companies are going to be, you know, potentially forced to close out because they're not getting enough income, because people tighten up their pockets. There's a crunch, so on and so forth. So you start closing out of stocks. You cash out. You need the cash in this crisis. Hence why stocks start to fall. So here, this is a great example, because what we have, as I explained before, about, you know, when there's an underlying theme in an asset. Okay, in this case, we're selling, pull back, sell, pull back, sell. Okay, so when there are themes there, yes, we have these pullbacks or these dips, whatever the case may be, but they are should be seen as opportunities to further sell or buy that instrument. Okay, when that theme is dominating the asset. So we can see here perfectly with the example of Dow Jones. Okay, we had a breakout of this ascending channel structure here, breakout. Okay, price finding psychological support around this 25k mark, pull back to the next psychological and area and supply zone, 27k, sell. Again, pull back to next zone, sell, pull back, sell. You get the point. So that's just an example there of an underlying theme driving the markets. And as I say, this one being picked up with the rising cases of coronavirus and the government shutdowns. Now let's go into the dollar. Okay. All right. Where should we start off with? Let's start off with in March. Okay, here. So this is the Dixie, the dollar index basket of 6 currencies. It's heavily weighted by euro. It makes up over 50% of the weighting. But look, in March, okay, so we've seen the bond market react first, right, with those yields falling. We've seen the stock market start crashing, okay, and now we're looking at the dollar. We're looking at the dollar. Remember, it has that safe haven status because it's the reserve currency of the world. Now this is where FX starts to come in, and we had a bit of a delayed reaction. So it started with bonds, fixed income, then stocks, and then reaction here in the FX market. So you'd seen, and this was a scramble for dollars, as you know, I think it really started to hit the markets, the realization of coronavirus impact and the government lockdowns. So people were like, where should we put our money? We go to the safe haven for the dollar. And you can see how aggressively markets were backing dollar versus its peers. Okay, really gunning to the upside here, as you can see. All right, and then we started to lose ground, and the key reason, the catalyst for that, again, this is my view, but it's a very strong view. It's with the FOMC. Okay, the central bank of the United States, as I went back to and explained before about pumping money into the markets, they've been doing it aggressively. They're slashed interest rates. They started pumping all of this stimulus into the markets, literally flooding, okay, flooding the markets with dollars, to try and prop up the economy, and to keep Trump happy. So dollar starts to lose ground here. Okay, we start to lose ground. FOMC has still been conducting and announcing more measures. They remain dovish. So you see a dip here, a pullback in dollar, been sold, pullback, been sold. Now we're pulling back again. And the reason, as I explained most recently, the pullback that we're seeing now is those US and Chinese tensions potentially. So yeah, guys, that's giving you a brief and hopefully informative understanding of sort of the things that are going on in the markets now, what you should be looking at, and trying to understand them. In terms of if I can offer a bit of advice or recommendation, is with regards to the newspapers, that is a very, very good starting point, because they will explain the moves. Okay, they'll summarize them. They like to overcomplicate things, a lot of these news wires, unfortunately, because they're very tailored towards the professional, the professional market rather than the retail guys, like you and I. But do try and anything that you don't understand, just type it into Google, type it into YouTube. If they're talking about monetary policy easing, what does that mean? Type it into YouTube and get an understanding, because these are the things that are influencing your currencies. And fundamentals right now are more important than ever, because it's literally chopping and changing like every week. There's something new to talk about. So yeah, guys, that's all I wanted to talk to you about. In detail, I will go into some other topics, but I just wanted to touch upon some key points right now, because it can be a lot to consume and be overwhelming on the fundamental front. So yeah, that's it from me, guys. Anna?
Thank you so much,
No
Ken.
worries.
Yeah, if you guys, please do not hesitate to follow him on social media and join the network, the Freak Network. And if you have any questions for him, do pop them on the question box and we'll make sure that they get answered. Awesome. I'm going to leave you with one exciting project that ATFX is about to launch very soon, which is our social trading platform. I'm going to leave you have a look at the presentation that we put together to introduce it to you guys. In the meantime, I'm going to double check with our next presenter, see if he's ready. Awesome, awesome. Please, everyone, if you have questions about ATFX, about anything that you're struggling with at the moment with your trading, about any specific situation that you would like more insights on, that's going on at the moment, you know, market outlooks, just anything, please ask away, because this is the opportunity to do it. This is why we are doing this, so that we can interact with you guys and we make sure that we provide value to you and that you become better traders at the end of the day. Also, I'd like to add that I'm talking privately about, with a few of you, and I have already sent a link to some of you guys who are interested in opening an account with us so that they can have access to all this educational material for free. We do have sponsorships with trading academies, we have scholarships, we have tons of resources, and this is our aim, to grow our educational resources so that our traders, our clients, you know, become experts. And so please do not hesitate to show your interest on the question box. And I also shared the link that you can click on to open an account with us and have access to all the products that we presented to you this morning. So Mark Owen's Trading Academy courses, you know, ADVFN subscriptions. I know a lot of you guys come from ADVFN and are huge fans of ADVFNs, so are we. So they have subscription about signals and market news, which is very, very extremely valuable. And you'd have it for free if you're a client of ATFX. So if you are interested in learning more and becoming better at trading, please make sure you reach out to us so that we can help you. Thank you very much, everyone who showed interest. I'm excited to speak to you and being able to help you along your journey. Our next guest is, and our last guest, unfortunately, is going to be, I am extremely scared of pronouncing his name, guys. Like, give me a second, because I just want to make sure I don't make a mistake. His name is Rüdiger Born. This is the best I can do. He is German and he's an expert. Well, he lives in Japan, and so he's able to provide with insightful, information and live charts, live trading as well, internationally. So he, has a look at the Asian market, European market. He's a little bit all over the place, which is great. And today, he's going to talk about the current market outlook, but he's going to do it in a way that he's going to relate it to the charts, the current charts, so that you guys, can actually apply it to the actual market movements. After that, my colleague Pamela, who has talked to you already before today, is going to join us again. And we're going to speak about a bit more about ATFX and how can we help you and how can we make your experience and your journey better. So for that, I would really encourage you to stay until the end so that we can, solve your questions and just make sure we bring you value again, and we fill up whatever gaps you're missing in your trading.
Hi everyone, this is Pamela from ATFX again. I take the opportunity. We have another 15 minutes before we start the next presentation, where we're going to be presented with the current market outlook on charts. So I take this opportunity to clarify any type of questions that you can have about ATFX. If Anna is in the line, could you please provide me or help me out with taking control of the video so I can show to all the
Absolutely, yes.
ones that are in line how to find the information about ATFX?
Yep.
Excellent. May I have excellent. Thank you very much, Anna. Always present. Very helpful. Thank you, Anna.
No worries.
So to everyone that is online now, I just want to briefly guide you through our website, let's say. ATFX, as I mentioned at the beginning of this set of webinars, is an online broker. We offer spread betting for clients located in the UK, residents in the UK, and Forex and CFDs for all clients. And for you to see the type of spreads that you can find, the very competitive spreads that you can find in our website, you can visit atfx.com and go to trading and choose one of the account types that we have. I'm going to briefly describe the type of accounts that we have at the ATFX. So I hope that this clarifies any questions. If you have, please feel free to raise your hands and drop the questions in the chat that we have today. So we have a different type of accounts that meets the needs of every single trader. Of course, as long as you trade Forex and CFDs in indices, commodities, cryptocurrencies, shares. Okay, so we have from the standard account that I would advise like beginners to start with the standard account. And we have accounts with very competitive spreads as well that offers some perks, I would say, like a free VPS, for example, and trading tools that help traders to improve their performance as a trader. ATFX always acts very responsible with regards to the support that we offer to our traders. We also have professional accounts for those clients that require a slightly higher leverage, and that they have as well the necessary qualifications in terms of experience to become a professional account holder. If you wish more information about how to become a professional account holder with ATFX, you can also find that information in our website, or you can contact me directly. I'll ask Anna to please add my email address to the chat of these.
Yeah, I have been popping links that you guys can click on in order to open an account with us and have access to everything that we've talked about and more. But I will definitely do it right now again and pop Pamela's email address and phone number.
Excellent. Thank you very much, Anna. That's very kind of you. So that we offer certain different advantages to our traders. As I mentioned initially, the free VPS, and for those clients that would like to have a chat with somebody that has many years in the industry as well. And please be advised that with the Edge Premium and Professional account, you will have with the package of the account sessions, one-to-one sessions with our chief analyst, which would be Alejandro. And that comes with the Edge Premium and Professional package. Please feel free to ask any questions at this moment, since this is the moment that I will be able to clarify any questions regarding ATFX. I'm going to jump to the list of our spreads and information that you can find in our website. Okay, let's say that you want a premium account. The premium account is the type of account that offers the most competitive spreads that start from 0.0 pips. Let me go there so you can have a quick look at the spreads. So you can see here, for example, euro dollar, you have 0.0. You can find on the top of a page the list of products that each account type has. This is the premium account. You will find forex, metals, oil, and indices, for example, at a very competitive price. Here you can find the product name, the minimum spread that we have in our platform, the minimum lot size, contract size, and etc., and the leverage as well, which is very important. We're FCA regulated, so we comply with all the requirements from the regulator. Our maximum spread, leverage offer is 1 to 30, but it depends according to the product type as well. In this type of account, we don't have shares, but you have the full list of shares on our Edge account. So if you are a share trader, please have a look at the list of products that we have in the platform. If you want to try the platform, the demo account, Anna already put the links there, but if for some reason you didn't manage to get the links from the chat, you can visit our website, go to trading, click on open a demo account. In a few steps, you're going to be able to try the demo. If you want something more specific with a certain amount of funds specific to your trading strategies or needs, you can contact us directly through the email that Anna provided, or through our interactive chat that you will find in our website. Do we have any questions at the moment, Anna, so I can help clients with it?
Yes, someone was asking before. Let me see if I can find the question again. He was asking whether he I guess this question is related to Marcos before, whether he could get rid of Fibonacci retracements from the chart. I don't know if
for any questions related to the presentation of any of our speakers, let's take note of them. Please be advised that we can pass these questions to each of the speakers and get them answered. Please just leave your contact details so they can send the response. Is that all right?
Sure. This is what we're doing. Yeah, so the questions that are coming through are more related to Nabil is asking, Mark offered a lifetime access during his presentation. What does this package consist of? Yes, exactly. So out of the courses that they have over on his trading academy, he's offering lifetime access to specific products for ATFX clients. So if you click on the link that I'm going to send you, Nabil, you can start enjoying all those along with your accounts. But please, if you have specific questions about ATFX and the type of accounts that we have and whether it would suit your level of experience or not, either any kind of doubts that you might have, whether I would also like to know whether you knew us from before, is this the first time you interact with us as a broker? Where did you hear from us? I would love to chat with you guys. So if you can speak to me on the question box.
Right now, please.
now that we are here.
Yeah, excellent. So there's another 8 minutes until we start the next presentation. I would like to remind everyone as well that to open an account with ATFX is very simple. In 2 simple steps, you can open a trading account, but if you have any questions in advance, if you wish us to clarify any concerns that you might have, or or general questions, please feel free to drop us an email or contact us directly. Handing over to you, Mrs. Perez.
Thank you so much. Okay, everyone, thank you for being there. We are about to start our last presentation of the day, or our last talk of the day. And again, if you have any questions about anything, there is still time to ask them, and for us to answer back to you guys, because after this presentation, we're still gonna have some time dedicated to you guys, a little Q&A about everything, about ATFX, about what we offer, about educational resources that you may be interested on. I mean, everyone, doesn't matter your level, beginner to advanced, there's always skills to be improved, and this is a trading is something that you always need to be on top of and continuously learning. So let me tell you a little bit about our next speaker. Rudiger Born is Managing Director of Born Traders and also founder and head of trading of Born Stahlberg and Partners. That's their German there. His asset managing enterprise in Switzerland. And since early in the 90s, he is an active trader at the international financial markets. His preferred markets are stock trading, which is part of his daily trading business, in the same way as trading currencies, futures, and options. So those who trade futures and options, they have an opportunity to ask your questions now. Additionally to the classical trading instruments, in the meantime, CFDs are also in his daily focus. Great stuff. He's telling me I am joining now. Great.
Hi, this is Rudiger from Tokyo.
Hello, Rudiger. I'm sorry if I messed up your name and your surname. How do you pronounce it again?
Just say Rudy. That's okay. Rudy or Rudy, something like this. That's perfect with me.
Hello.
Hi, I'm still here.
Yeah, I think we clicked on something that kicked me out of the event, but I'm back again. So yeah, I was introducing yourself to the viewers
And I was telling them that you're going to go through the current market situation, but based on charts. So if you are ready and happy to proceed.
I'm ready to go. I have the platform running, so I can start at once.
I don't know. I'm having issues with transferring you. Just 1 second.
Take your time. No worries.
Also, please, if you have any questions, do not hesitate to ask them below.
Yeah, no problem. Shall I speak 1 hour or 40 minutes or something? Do you have a time limit?
We don't have a time limit. We can be here as long as you want.
That's awesome. That's really dangerous. I can talk a lot about the markets.
I know you can, and it's great. Just take your time, and yeah, no worries.
Okay, I have in focus roughly 1 hour, but depending on the questions, maybe it can take a little bit longer or whatever.
Yes, that's perfect. So we're planning for this event is planned to end at about 1:15. But again, if it's just about answering questions and bringing more value to the viewers, then we don't have any issues with that.
Perfect. So I wrote down 1:15, and but I will ask the people to ask a lot of questions. I think it's worth it. If the more they are active, the more fun it is for everyone, I hope.
Absolutely.
So as I can see, I can read the questions, I guess. I don't see any right now, but it seems that I'm able to see them. So I will directly answer to them. When it's done, I will end the event by myself, right? You will not do anything. So when I'm done, I will just close everything, right?
I'm here. I will be here. I've been here all throughout the event, assisting you guys and assisting the viewers as well. So if any relevant questions, any urgent questions or relevant to the thing that you're specifically speaking about come up, I will jump in and tell you, I'm here to help you. So don't worry about that.
Perfect. Perfect. So I'm waiting for you go, right? I'm not doing. I'm not.
Seems like nobody has any questions at the moment, so you can kickstart your presentation. We can leave the questions for the end, maybe.
Okay, no problem. I did not know that I can start or not. Okay, I will start now officially. So I warmly welcome everyone here, and I'm really glad to be able to speak to you here in the ATFX Masterclass. It's a really awesome event, especially in this situation because of COVID-19. It's a really special situation for many of us. Many of us are not aware about such movements in the markets before. So it's really awesome to speak about the market and the opportunities we have currently, the many, many setups we have and the big moves we see in the market right now. So I'm really happy that I'm able to be here. At the very beginning, it would be lovely if you could send a short feedback so that you can hear me clearly. If you have any issues with that, just let me know. Unfortunately, I cannot change my accent. I'm a German guy, but I'm living in Tokyo right now. So it's a little bit a long distance situation. However, markets are global. And so we are talking about global markets. We will talk about different markets, of course, New York, maybe we will talk about the currencies. We have so many opportunities in different market situations. So it's awesome so that it's not only local things, so that we can have discussion all over the world. So I personally love to trade different markets. I'm not specialized on one of them. I have, of course, some I prefer. Of course, the currencies. They are really, really awesome to trade, and they are 24 hours. So even when you are not able to trade the whole day, maybe you are busy in the daytime because of kids, of your job or whatever you're doing, you can trade in the evening hours or even at night if you want to. But other markets are also really, really awesome. I love the American markets. S&P 500, for example, is a very nice one, or the New York Stock Exchange. And we have a big universe of tradable markets here. You can see this here on the left-hand side. This is not new for you, I know that. So I'm picking roughly all of them. So sometimes in my favorite markets, I don't see something useful for trading, so I will pick something else. So I'm not sticking with one market and saying, hey, this is my favorite, only this one. I'm always looking for special pattern, and I want to tell you about these pattern because these pattern are telling you a lot more about the upcoming market situation, what the market is doing in a fast move or in a really slow move, what we can expect in the near future, or maybe in the big picture as well, than many people expect. So I'm not a fundamental guy. I'm not so much looking, of course, of interest, because of my interest for the markets. I love to hear these stories, but for my decision making in trading, it's not really relevant. I'm only focused on the charts because they are honestly telling us what the people outside are thinking. And these patterns are really, really obvious sometimes. In some cases, they are not obvious. And if they are not obvious, I will not trade that market. A little bit about my background. I'm a trader since 25 years. I founded my first companies while I was at university, early in the 90s. So I'm sticking with the market for a really long time. I saw a new economy. I saw some crisis in the markets and really strong bull market. So I've seen many, many situations. And it's always lovely to see the pattern we see now are roughly the same what we saw 10 years ago, 20 years ago, or let's say 10 minutes ago. So it is all coming back again. And also for some people, it looks quite new. I'm sorry for, I'm a little bit, let's say not ill, but everyone seems to be infected currently a little bit. So you see these patterns in many different time frames, and that's something you can see here. I have 4 charts currently here, and this is not necessarily that I have in mind all at the same time, but I want to have an overview and I want to have a detailed view here in the charts. So that's the reason it's all the same instrument. When I'm switching between the instruments, I'm changing all of them. I'm not comparing different markets so much at the same time, but I'm comparing different time frames. So here, for example, you can see the daily chart. So any of these bars or candles, depends what you prefer. I'm very much sticking with the bars, especially as I'm not so much looking at the single bar. I'm looking more for the complete movement we can see here. And so this is the overview, giving me a long time overview so that I can see where are we coming from, especially when I'm switching to not so obvious markets. then it's nice. Of course, everybody knows the FTSE 100, everybody knows the exact numbers. But if you're switching to a currency pair or to a specific stocks, for example, then it's maybe not clear, are they still in a bull run, or are these guys doing a bad job, or did they do a bad job in the past? Well, that's good to compare the big picture. But switching to the intraday, for example, the 4-hourly charts, the hourly or 50 minutes or 5 minutes, I switch between these a little bit. I will tell you when we go through the different markets and find some good opportunities, and I will tell you about the patterns I trade and I like. So it's easy for you to adopt. Maybe it's because they are quite obvious. I will tell you many different situations you can use. So please try to find out by yourself. Of course, you can think about, he's suggesting this is a good trade or that is a good trade, but we should never forget trading is let's say a game. I don't like the word game in this field, but it's a little bit a game of probabilities. So we are not dealing with 100% chances. Never, please never have a feeling, wow, this is so clear, it's 100% sure what will happen. No, this is not the task of a trader. A trader knows a little bit about small advantages and probability. And as you can guess, if you have only a probability for a win, you will have some losing trades as well. So it's really important to accept this. If you have some losses, it is not like, you're a bad guy, you did really bad in this case. No, it's just it was by chance, to be honest. The chances were better to our favor, but not 100%. So that's what we always definitely have to have in mind when we are trading. It's really important to never forget this, especially when you are a starter. You very often feel, oh no, I have a minus in this trade. No, I did something wrong. Yeah, maybe you did not anything wrong. Everything was perfect, but unfortunately, it was the 20% chance for a loss occurred. You know this from throwing a dice. Chances of throwing a 1, for example, or any number, of course, is very low, but obviously several times it occurs. So you never should bet all your money in one trade and think it needs to be a 100% chance. But if you are dicing, it's a bad example maybe, but if you are trading several times and say, okay, at the very end, after let's say 10, let's say 20 or 100 trades, you will have a profit. So that's something really typical, and don't be in a bad mood if you have some losses, even if you have some consecutive losses. It is typical. As long as you know what you're doing, no problem at all. So let's come to the nitty-gritty. Let's find out a little bit what is important to find some good ideas. My trading approach is really easy. I simplify it a little bit, but it's really easy because it is only at the first glance, it's only most of it just looking where's the strong move, where are the bulls going or the bears going in a really strong manner, and what is a weak move. And we can see this several times. We can see it in many time frames. So no matter what time frame you prefer, we can start with a 5-minute chart, for example, just to have a clue. Let me take out my drawing tool so I can. That's awesome. I can easily see this here in the chart. I hope the same for you. So you can easily understand that some parts of the movement are quite strong. This one, for example, even this one is quite strong. And you can see that we have another direction. We had something from here to here. And this one was not so strong. It was a little bit weak. It took longer time. It was not so strong moving into one direction. It is a little bit going back and forth. Some people know it's a meandering between some trend channels. This is a typical, what we call a corrective pattern. So what we easily do is, in the first glance, every one of us, ask your child. If you have a small child, you can ask him or her and say, what is a stronger move? Everybody would see this, and that's the beauty of the chart and the need of the chart. I don't want to be the super sophisticated guy knowing everything better than the world. I do not, but I don't want to be that guy, because it's not important what I think, it's important what the market is thinking, what all the other guys outside are thinking. So it's important that everyone sees that. And if I see something like this from here to here and compare the move from here to here, which one do you think is the stronger move? So at the first glance, you can see, okay, no, this seems to be strong. We only had small setbacks. It was strongly into one direction. And we had something quite weak in an ABC. ABC is something we will have many, many times. It's something like a three-wave pattern. This is very, very, very often occurring in the market, but sometimes you don't see it so clear. Sometimes it's a little bit like a walking back and forth and something like this. You can see this, for example, at that point here. You can see it here. So things like this, they occur very often. So if you have this, you have the first information. Which one is the strong direction? This one was strong. This one was down and weak. So which direction is the better one? If you want to trade, you should go with the strong guys, not with the weak guys. Of course, with all the girls outside as well. I hope there are many girls and women coming more to the market, because I taught a lot of people, and to be honest, the female traders are in a better position because they are not so much yeah, they are a little bit more cautious than all the men outside. We, of course, I don't want to give up. I want to have it now. And this is a really strong opinion sometimes. This is really dangerous. But if you know about yourself, then it's no problem at all. So don't feel bad if you are a man like me. Yeah, well, it's possible to be a positive trader as well. But if you're a girl, don't feel, this is a man's world. No, it's not necessarily. You're welcome to be here, and you have a good chance to be very successful in the markets. Okay, let's have a look at this one. You can see strong move to this, weak move to this. Which is the preferred direction? It's the strong move. If I could ask you, which do you prefer to trade? This move or to trade this move? Of course, everybody would say, no, this one. This is the good guy. Yes, indeed. And the good thing is, there are some pattern, let's say pattern combination. I don't want to dig too deep, but if you want to learn a little bit more, this is based on a Dow theory or the Elliott wave theory. So it's something I like very, very much, because this is combining different moves together and have an idea what is most likely following next. I see a remark that the video is frozen. I hope this is only for you. No, I don't hope it for you, but I hope it's not on my side. If everyone is okay, just let me know so I know I cannot do anything. Otherwise, maybe you have to relog in if something like this happens. I know this from other webinar events. Sometimes this might happen. So what I like to see is both of them. And that's really crucial. Many people say, I see this one. Now I know what I have to do. Well, this is a little bit dangerous, because sometimes the market in the very next step is doing something like this. I'm a little bit theoretical now, but we will switch to the charts and find many opportunities after I told you about the situation. Sometimes this occurs. This is not even rare, but now it's guessing which one is the better one. You can say, yeah, but this one was longer. Yeah, but at that very moment, you don't know what is coming next. Maybe it is doing like this. Haha, now you're completely wrong. So it is important to have this one, which we call an eye catcher. This is something very obvious. At the very first moment, when you see this, normally when you approach a chart and see something like this, you normally feel like, wow, I missed this opportunity. That's awesome, bad, or I'm really sad about this. No, don't take it like this in the future. Take it like, awesome, I see this. And this is your eye catcher, the first approach at the chart, giving you an indication this is a strong move. But what we want to see after that is something weak, something like this, for example. It could be something like ABC, but you can clearly see the difference, the upside and the downside. You can clearly divide which one is stronger or not. You can decide it very easy. So we need both of it. The eye catcher to give us an impression, wow, these guys are strong. And the corrective pattern, the breather in the market, let's wait for a while, which is giving us an indication this is the coming down. This is giving us a better or a cheaper price for entry, a long position, in this case, a long position. And is giving us a clear indication, okay, the bears, so the sellers in the market, they are not too strong. They want to have the market down, but they are not as strong as the bulls currently. So as soon as they give up, I want to be with the strong side, which is the bull side in this case. We will do this with the bear market as well. So if you see this one, very easily, it is said we can use something like a trigger here. So as long as the market is giving us lower highs, for example, this is indicating the bulls are not back in town, so we have to wait a little bit longer. But when the market is breaking through the intermediate high, it's, in my case, never this one, because this is quite late. And from here on, it's new. It's a new area. We don't know exactly what will come here. Especially, we have some situation where we don't know that. But if you have something like this, it is the minimum chances to enter the market and come to an area like this. A little bit overshooting. It's typical. We all know the situation. The market is breaking through a level. You say, awesome. And your neighbor is saying, did you see in the news yesterday, the market has a new all-time high? And what did the market, after having an all-time high, turning down a little bit? Maybe a little bit, or a strong move to the downside. So this is not the best situation to enter the market at that point. It's better to have it at that point, in a lower point. So if you have something like this, you have a really, really easy approach. Let's clear a little bit. If you have a strong move into one direction, a weak move into the other, then you have a setup for a long trade. But we need a kick in the, let's say it like this, we need a trigger to start the position. So this could be, we have many opportunities. I will suggest some others as well, but we have a trigger. If the market is going through this level, this is not a proof, but it's a strong indication that the market wants to continue the strong move, which is to the upside. So we can have this in many, many situations. You can see this here and a shaky to the down move. You can see it maybe here and something to the down move, or here. You can easily compare. This is strong, this is weak, for example. This is strong, this is an ABC weak. Even in a small picture, you can even go on a 1 minute chart to see this. I not necessarily suggest to trade on 1 minute, because we have to keep in mind we have some spreads in the markets. That's not an evil thing, that's a natural thing. Of course, there must be a difference between buying and selling, and that's a normal thing, but we have to take care about this. In some markets, spreads are a little bit wider. In very famous and liquid markets, it's a little bit narrow. So just have an eye on it. Sometimes minute chart is super useful to trade. Sometimes it's not perfect, but you can see all this behavior, all these pattern also in the minute chart. But you can see this also on a big charts. You can also see this this is a daily chart, a strong move and an ABC, for example, to the down move. And in this case, we can see this on the other side, a strong move to the downside and an ABC to the other side, and a continuation to the lower end. So it's not necessarily bounded to a low time scale. You can find it in any chart, whether the monthly, which I not have in focus so much, to be honest, but in a daily chart and an hourly chart, 15-minute, whatever it is, you will find it. So feel invited to find out by yourself and find out which market situation is useful for you. I see it is a little bit delayed. Yes, indeed. It seems a little bit frozen here as well. I have a small screen of the photo. I think we will have a recording anyway, because I see there's a small yeah, it will be recorded, as I see. So I hope for some of you it will be in real time, and not for everyone it will be delayed. I don't see there's any problem on my side. I'm really sorry about that one. I have a really fast internet connection here, but I hope it will be okay. So keep us informed a little bit whether this is okay for someone or for everyone, or not okay. So I might take this into account when I'm talking to you. But at least you can see the recording afterwards. I hope it's useful for you what I'm talking about here today. So currently, let's see the current situation with the S&P 500, which is for us as a tradable instrument, is the SPX 500, which is a CFD on this. It's on the index. So it's easy to trade that one. And we can see that on the lower end and on the bigger end, we have some really good trading opportunities. For the first glance, we see, for example, in the daily chart, many people are asking me, is the bear market over? Is the corona crash, is the situation now with the virus, is it over? Can we start piling up stock positions, for example? Or can we focus on a longer term trade, for example? Let's have a look on the daily chart first before we come to a shorter time frame. If you have this in mind, we can see that currently from the very low here, I switched to another one. This one is better. From the lower end here to the latest high we've seen here in the market was quite strong. We see something else. I told you about something like this move against this move, maybe you remember. But there is something else we should take in mind. Sometimes the market is not moving like this in a straight line. Sometimes it has some interruptions. But you can see it here, for example, here and here. But you can see these counter movements, they have a gap in between. So we can see the market is proceeding to the upside stronger than the counter movements. Let me just draw it like here. You can see it like this. This is also the same implication like we have here with this strong line. It's a strong move into one direction, giving us a good indication that the market is more interested in the bull side than in the bear side. Not only because, yeah, of course, it's going to the upside. What else is he thinking? Of course, it's a bull market. Yes. But when the market now on the downside is coming something like this with overlapping, you can see we also have some counter movements from here to here and from here to here. Then you can see they are overlapping. That's exactly the situation which is not the strongest one. So in this case, we see which one is the strong one and which one is the weak one. We have already from the low in March to the latest high late in April, we could see a non-overlapping situation, a really strong one in America, for example. And this is this is giving us an idea that currently the traders in the market have a good thinking about the bull market of the recovery. They are not weak on this one. They think there's more to come. They are still in a positive mood here in the market. But we need a setback. It's typical to have a setback. We had it here, and we will have it in any time frame that after a certain while the market needs to set back. And then for that, I want to show you a very, very important tool which I really love to use. And this is Fibonacci. You can find it here. There's a small f nearby the lines. You can easily find that. Fibonacci, I'm really sorry, this is a German version of the software. Of course, you will have the Fibonacci retracement must be the reading here in the international or the English version. And you will draw some lines here. And let me introduce these lines. It's a really, really useful tool because this is giving you a raw idea into what area the market typically is going for a setback. And you can estimate if it's less than that, is it a good or a bad sign? Or is it more than that, is it a good or bad sign? So let me introduce the numbers here. You don't have to do so many things. If you are wondering, some people have different lines here. You can easily, I hope this is popping up. If you go to I hope you can see that. You can change the levels here as well. So I prefer a little bit different levels here. I don't have the early 20 level here, 24.6. I don't have it here. I keep it out normally, but 38.2 is a very famous number.
Sorry to interrupt you, Rudy. I'm so sorry, but the viewers are saying that the screen is kind of blurry, or that it cuts. I don't know if there's anything you can do at all. Maybe, I don't know.
Let me check that. Unfortunately, I don't have anything running, and I have a very fast internet line. It's a 1 Mbit.
Okay,
Or more than 1 Mbit.
from my side, I'm in the UK, everybody's in Japan, and from my side, I can see it perfectly. So if it cuts, I suggest that you guys stick through and listen to what he's saying. And then if you want to come back to it, we will definitely send you the recording via email. So there's nothing you need to worry about. Sorry.
Yeah, no, it's absolutely okay. I'm really sorry about that. I would like to do something so that you can attend live here on this, but I really suggest just listen. If it's okay for you, just listen a little bit, so you can get used to my words a little bit, to my voice and to my accent. And later in the recording, you can of course compare everything. And I also suggest, if you don't have already, take at least a demo account and check it by yourself. Try it out a little bit. Even if you're a starter, it's really, really useful if you do by yourself, not only seeing and listening, just to do by yourself. And you can see, oh, it's not so difficult to do. So even if it's a little bit overwhelming at the very beginning, oh, so many things to do. No, it's not. It's quite easy. Really, believe me. All start is difficult if you're a beginner. And if you are a trader for a long time, you know, it's easy to apply anyway, so no worries at all. So we have the different Fibonacci levels. Some people are using the 76.4 level, which is roughly the same. I have, maybe you cannot see that, I'm using the 78.6 level, which is roughly the same. But I use this as a last line of defense. I have to tell you a little bit more precisely, but this is my, if this market, if this level is broken, something changes in the market. And you can imagine, if I have another line short before or a little bit higher than this level, this is the last line of defense, and this is the very last line of defense. That does not make sense. So I decided to only have this one here in the market. Many professionals are using this one, but the meaning behind that is not very different. If you don't want to switch or to change your numbers, you can keep the other one. It's also okay. But it's giving us an idea in which, in what area the market typically is coming. And this is roughly set between these levels. It's not a 100% a must that this will happen, but you will see that very, very often the market is going into this area, and this is indicating that this setback is a complete, a valid correction of this movement here. If you have something smaller, it is questionable whether this is a really complete setback of this one, or whether this is coming to in a later time. But if it's going into this box here between the 38.2 and the 78.6, then we have a very good chance that this is the completed correction of this up move from March to end of April. So this is giving us a good idea for that one. This is with all the statistics, because we did a lot of number crunching with the market. So we have something like a statistics working together with other companies as well. And we have something like a probability curve. It's nothing like the Gauss curve. It looks a little bit similar like this, but it's not intended to be. But you can see probability is highest in this area, roughly said. Everything above is, the area here is very small, and also this, it's indicating probability for this or that is very low. But what does this probability mean? It is the probability that after the first strong move and a corrective pattern here, the market will overshoot here. So of course the market can plunge through that. Of course it can. But in this case, we will not talk about this anyway. So it's no use to talk about this one. We will be stopped out, and that's it. But if we want to have something like this, and that's our target, we want to have something higher like this, maybe very much higher, but at least higher than that point here, then we want to know how obvious, how high is the probability that we will see a low here, and the low here is giving us a good turning point, especially if we have something like a trigger to enter the market at that point. To give you an idea how often this occurs, this is of course in the future. You can draw this and expect the market to come back a little bit, but you can of course afterwards check that and see, okay, we had a strong move to the upside and the market came down into this area. Okay, worked. We can have the first move here, for example, and the market take a counter move, moving directly into this area. It's very typical between 50 and 61.8. This is the most preferred area, but not necessarily the market is going into this area all the time. So minimum requirement from my side is it has to come back, in this case up, because it's a down move, to the 38.2 level, but not more than 78.6. Why these not more? You can imagine if you see a strong move. Let's go with the current situation. If you see a strong move, and we will do that on a lower time frame as well, because I don't want to leave you alone today without some ideas what you can do the very next hours or days. So if the market is strong in this direction, we are arguing, hey, the market is looking good. Awesome. And we can accept that the market needs a breather, coming back a little bit for a recovery. But how do you feel if the breather is nearly taking away as much as our strong bulls did before? You would say, yeah, well, it's not looking perfect. So that's the reason for that line. And this is giving us a good idea where to say, okay, this is ending our idea. Unfortunately, we will not have hours for today because I would like to talk to you more about something like stop setting and things like this. We will do this maybe in the future if we have a chance and if you wish for, then maybe we can have some other events in the future. But for today, I just want to give you an idea. As long as the market is staying over that level, the bull market is valid, as long as the market on the downside is giving us the overlapping situation, or if not like this, at least something like an ABC pattern. And this giving us an idea what the market can do next. Of course, don't take this level now exactly, because I don't know where the low is. I don't know how the pattern looks like. It is just a raw idea what we can expect. So it would be typical that the market at least is plunging through this level and coming into this direction. Is probability for this 100%? Of course not. But the probability is high enough to look for some trading pattern which are directed to the downside. So on a lower time frame, I'm now looking for short opportunities because I'm expecting the market to fall back into this area. So now we do something what we call synchronization of the different time frames. I have an idea what the market is doing in the daily picture, but I don't want to trade daily necessarily. So what shall I do in this case? I should have a closer look at that point here. So I'm switching to a lower time frame now and checking the situation there. So we can keep this one so we have all the levels in mind. So okay, we can see how far can it go, and are there some support levels or resistance levels in our way. So it's always good to have this in mind, so I have a view on it as well. But we can have a look at that movement here, and let's switch to a 4-hourly chart, for example. So the 4-hourly chart is giving us a clear sight on this one, and we see this one looks quite strong. We can even switch maybe to a lower time frame. Let's go on an hourly chart maybe, so we have a clear look at this part of the chart, and we can see this part of the movement. Is it strong or weak? What do you think? Yeah, it looks quite strong. Okay, that's awesome. That's really awesome. So we know we are looking for down movements. Should we short the market soon? Okay, let's see what the market did after that low. Okay, what do you think? Is it a strong or a weak movement? To be honest, it's also looking quite strong. We have no clear decision which one is the stronger. You can see the slope is roughly the same. You can see, okay, this one going down, this one going up. It's roughly the same speed. You can also see that the counter moves, the big counter moves, which are orientated here maybe. They are far away from each other. There's no overlapping. You see the same situation here and here. They are, let's say, in the same size, roughly. And so we can compare this one. So we have something like we were showing before on another time scale. We have this here as well. So we have the counter moves here and here, no overlapping. So it was a strong move to the upside. Okay, it was the end of the move. This was the suggested top of the move. And we have the same situation here. Okay, to be honest, I would expect that the market at least take a little bit higher. We are currently here, so we are on the best way to move somewhere around here already. So it would be more than typically that after something like this, a 5 move, the market will turn. We have this constantly, 1, 2, 3, 4, 5. We have very often these 5 moves in the market. The first one, a second, a third, a fourth, and a fifth one, for example. So this is nothing really rare. You can, let's say, nearly rely on this one to have a 5-wave pattern. And this seems to be something like this. What would you expect after this one? We were thinking about some weak market currently because this one was strong. But on the other side, this is strong as well. So I would not search for short positions currently. Not after I saw this one. Strong move to the upside is countering the strong move to the downside. So it's an equal situation currently. But after a 5-wave move up, we could expect that the market needs a breather. Something like this, for example, or something like this, for example, a little bit higher, maybe also possible, not a big difference. So, okay, if the market after this strong move to the upside is coming down in a weak manner, then we can expect that the market is at least trying to do another one here. And this one would implicate the idea that this is a strong move. This is an ABC pattern, and we will continue to the downside. Unfortunately, my sheet ends here, or the chart ends here, but you can see the expectation is that we will go somewhere on the downside. Keep in mind, don't try to short at that point. Don't try to find the best possible entry, which is, of course, at the high for a short. Because very often you will not get this. Of course, you can do this. We will take care maybe in another event in the future to find a very close spot here with something like clustering levels or using some indicators to find a better idea to get closer to the highest point. But at least if you don't want to have this one, you can think, here is a low. If the market is going through this low, this stops the uptrend, the possible uptrend, and we could think about entering a short position at that point. With the expectation, this is an ABC, we should expect something like this. So something lower. Okay, I will take away my drawings and no, this one. To be honest, this is exactly what I'm expecting here. I expect the market to come lower in a daily chart. So I think there's a good chance that the market is coming into this area, which is possible when the market is roughly doing like we suggested here. Take care. This is just a suggestion. We are a trader. We should not have an own opinion. As a trader, some people are asking me, yeah, but yesterday you said the market will do this. Yes, yesterday's information looked like this. Yeah, but you turned your opinion. Yes, because as a trader, I don't have an own opinion. I'm trading what the market is giving me. It's not useful. Maybe I'm the smartest guy on earth, which I'm not, or what I'm not. But if I am, but all the other guys in the market are doing something against my opinion, then I will not have a chance to survive in the market. So I will stick with the crowd and say, okay, if you want to go short, I'm with you. You switched to the positive mood. Hey, guys, may I be part of your team? No problem at all. So this is fitting together in the big picture, which is giving us an indication, a little bit more down would be useful and not killing any bull market. It's just a corrective pattern at the first glance. And after some, let's say, a second wave, or let's say a third wave, a first up, a second to the downside, the next one to the upside, we have a chance that the market will indeed continue to the downside. But at the very moment, it's not useful to enter a short position, because what we expect is only a corrective pattern. And remember, at the beginning, I was telling you, I don't like to trade corrective pattern because they are shaky. I like to trade something like this. This is awesome. You could enter at nearly any point here and you would be happy because the market was strong. If you have a very corrective pattern, if you enter any of these bars, you had so many minutes, in this case it's only minutes, but you have so many hours, minutes, months, depending on your time frame, where you're not happy because the market is not moving into your favorite direction. So that's really important to stick with that side you like, the strong move against the counter move, and to continue the strong move again. So the good thing is you have this in so many markets, so many time frames. There's no excuse, or I did not find something in this market. Yeah, switch to another one. Don't stick with one market. Stick with your trading idea, not with one market. Some people in Germany, I think it's the same in UK, of course. People love their home-based index most. The FTSE 100, for example. In Germany, it's the DAX. And some people say, no, I'm only trading the German DAX. I said, is it smart? You told me trading is a tough thing. And I can confirm that sometimes. But knowing it's tough, you say, it is tough, but if I do profits, it must be with my favorite market. Yeah, this is not very smart, I think. It's good to say, oh, my market is doing a breather. Nobody knows what they are doing currently. Yes, go to another market where situation is a little bit more obvious. So I invite you to use different markets here. You don't need to go into the single stocks. If you say, hey, Cisco, I don't know that company and I don't want to trade one stock, it's okay for me, but try out some currencies, for example, gold, crude, whatever you like. There are so many opportunities, or other indices in Europe or America or wherever you like, or even Asia if you prefer to trade at night, for example. But so I think we have very good opportunities from that. We can switch to let's say a 15-minute chart for a last overview here. Let me zoom out a little bit. So this is the same situation, but now we can have a clearer look here, the 15-minute chart, and we can see currently the market is still quite strong, so no reason to go short. And someone was asking, I'm really sorry, I'm a little bit delayed with my answering the questions. At the first glance, it is not said, or you cannot easily set a certain Fibonacci level will turn the market. That's something many people think, if we reach a level, then the market needs to turn. Let me draw something here so I have it in sight. So this is the thing. So when the market is reaching one of these levels, the market is turning. Okay, if I say one of each level, it's double or quadruple my chances that the market is really turning. But this is, of course, just a joke, because you could see here at that point the market did not turn. At the very first beginning, the Fibonacci's are not necessarily a turning indicator. At that level, the market needs to turn, but it is to give you an impression how far the market moved already. Is it the minimum requirement? Is it the typical requirement, or more than the maximum requirement, or what is suggested? So at the first glance, use the level like this to have an idea, okay, into this area, wherever there, but into this area. That's really important. So in a typical trading situation, I have a limit. I don't want to trade a market unless the market is going into the area above, in this case above, because it's a bear strong market, above the 38.2 level. This is giving me allowance to search for short trades, because in this case I know this counter move is big enough to counter this bear market in this case. But you are absolutely right. You can use the Fibonacci pattern, or not the pattern, the levels here, for specifying where the market will turn. But in this case, I suggest to use something like what we call cluster, to find levels where several levels are at the same yeah, at the same point level here. So for example, if this is a single line, this not necessarily will turn the level, the market here. But if you do something like extensions, Fibonacci extensions, and for example, I just want to give you an impression of what it is. For extensions, you measure counter movements. This is a counter movement here. And you can see we have some levels here as well. We have here a level, we have here a level. You can see here we have now two Fibonacci levels quite close together. And here we have also two levels quite close together. So chances are higher that the market will turn here. This not necessarily means the market will go there because there's the next level. No, that's not the right approach. It is more like here are two levels. Whether the market is going there or not, it's not clear. It's not, you don't know it. But if the market is reaching here, you can guess that many people are thinking, shall I take profit? Shall I search for a short opportunity? So when people are thinking, then there's opportunity that the market is changing. This not necessarily is for me setting a short opportunity here, but if I see this level and the market is reaching this level, I would switch to a lower time frame and have a close look at that point whether the market is giving me a turning opportunity or not. In my case, because I like this pattern idea, I would switch after the market is reaching this level. I would switch to this one and see is the market is to a minute chart or 5-minute chart or any lower time frame than that from before, to check whether the market is he doing strong move and a weak move to the upside and a strong move, so I can continue into the counter movement. So in this case, to the bear side, to the short side in this case. So think about the cluster situation. You can cluster many Fibonacci. Maybe we can have something like a Fibonacci event if you like. So you can wish for, of course. I know the guys from ATFX, they are really nice guys because they are caring for you. So if you wish for something, of course, we can do something, and hopefully with a better technical line. I don't know what the problem was here. We will check that, of course. But if you wish for something, of course, we can do that. I can do that, or some of the other speakers, they always do a good job. So as long as you're learning and you're willing to learn, you will have a good time in the market, because never stop learning, and you will have a lot of fun and a lot of good opportunities in the market in any time frame, whatever you like, and with different, let's say, trading setup, fitting your needs. Because I know that's something I just want to give you as a last thought for today, maybe. Otherwise, if you have some questions, you can write it down now, so I will answer your questions, of course. But some people are asking me, how should I be? How should I change to be a very good trader? I think it's no use to change your personality, because it's easy to change it in easy times, but in tough times, you will not easily change your personality. And I think there's no use to do so. But know your personality. If you're a little bit a hot guy, something like a jackass, and I don't know the English word, to be honest, but maybe you know what I mean. If you're a really active guy and risking a lot and doing, it's okay, as long as you know that. Then you can adapt your trading style to that needs. If you are a little bit a cautious guy, oh, no, I took a decision yesterday already. I don't want to switch my mind so much often. It's okay. Don't try to change your personality. You will not anyway. But accept you are like this, and then you need a little bit of different trading approach. The active guys, they need to be to find more trading situation, but reduce their risk, because they are doing many more trades. On the other side, the cautious traders, they don't want to have too many trading decisions, because every decision is giving a bad feeling. Yeah, maybe I'm wrong with this one. I don't dare it. It's okay. So you need a little bit more confirmation, accepting that a single trade is not giving you the biggest profit, but you're giving a good confidence, because the confirmation of a trading situation is a little bit more stressed in that trading approach. So I hope this is giving you an idea not to give up too easy. If you're a starter and not successful right now, it took a long time for me as well. unfortunately, in the 90s, there was not a good opportunity to learn trading. It was really tough to talk to real traders in the world. Nowadays, it's really easy because you have a lot of chances to do so, sometimes with a low internet connectivity. I don't know what the problem was, I'm really sorry. But at least you can see all the recordings of that. And so never give up, even if you're not in the best position right now. Currently, I think it's really awesome to be part of the market, and maybe it is necessary, because I think we have a good chance that the market will continue way lower, very much lower. And if you are a trader, you're always ahead of the market. You can react first. You know what will happen. You know how to deal the situations. So it is, I think it is absolutely necessary in the current moments. If the market is in a very good mood, hey, it's awesome, we can earn a lot of money. And if the market is in a really bad mood, we know it first. And to be honest, we can also earn a lot of money out of this. So it is also useful to stick with the market. Never give up. Don't dare too much at the beginning, but start trading. Start with a small account so that you feel a loss and that you can feel a profit. Don't overdo at the very beginning, and you will step by step be a very successful market participant and really have a lot of fun. Last glance on the euro at the FTSE 100. I don't want to let you go without having a look at that one, because I don't want to go into the details so much, because the small picture is roughly the same. But if you have a look at what we saw here from March, other than the US market, we had a lot more overlapping here. I just draw something so that it's easier for you to find that. If you see something like this, and currently this, you can see all the lows are lower than the previous highs. So this is a typical, what we say is a corrective pattern. So I fear that for the FTSE, the market is going down. It can take a little bit longer, going one time up and then down. But I think this is not the perfect situation for a bull market. However, even in this situation, chances for a really strong bull market are not zero, but they are less than that we are just in a counter movement. So we should have in mind this can happen. The good thing is, until then, we will have many opportunities on the way down, on the way up, so we can see and we can adapt our view. Maybe this is getting more realistic and this is getting more unrealistic, or less, the probability is going down, less probable. But in the meanwhile, we have many opportunities to trade this, because we also see here strong moves to one side and weak moves to the other. So I hope this is helping a little bit. There were no other questions. I hope it was a little bit enjoyable for you to be part of it today. I guess there have been many good opportunities in the markets today, and what you learned from all the other speakers today. I'm really happy that I was invited to be part of it. And I hope you will have a good future with trading. And if it's helpful, just let me know, and I will try to give you more of my ideas for approaching the market. So thanks a lot from my side.
Thank you so much, Rudy. I personally love how Rudy speaks. I think it's very easy to understand. I don't know if you overcompensate because you think you have a weird accent. I don't know what it is, but every time you speak, for me, it's like, yeah, it makes sense. Yeah, it's so easy to understand. So that's something I love about him. And also how kind you always are in the way you speak. It's like, you always suggest that we don't judge ourselves if we make a bad decision, if we lose, if we, don't place the best trade. It's just, as you said, keep trying and keep educating yourself and learning from it, but don't judge yourself. There's always areas to improve, as you said. And yeah, thank you so much for being part of the event today. I don't know if you guys have any questions to Rudy. I can see that someone asked here. Hi, when do you consider trend reversal in Fibonacci?
Yeah, well, especially when you have a cluster ahead, if you see several lines at the same level, then the chances are higher that the market will turn. It's not necessarily given that the market definitely will turn, but chances are higher. So I think it's really good if you have a close look at that on a lower time frame. If you see that, go dig deeper a little bit, go into the lower time frames and see, is there a first push into the other direction? If I can see a reversal on a lower time frame, I want to jump up on it, as long as I have a strong move to the, for example, downside and a weak move to the upside, then it's a good indication for that. So clustering is a good idea for that. Otherwise, in any area in between, I told you it's just an idea for probability, not in a certain level, but at any area there, you should have a look, is the market turning or not? Think about the eye catcher situation. You don't need to get the very first move. Let the other do the hard job. It's not like you have to turn the market. Unfortunately, very often when I was starting trading, very often I thought they would name me in the news today because I was turning the market. When I jumped in on the long side, the market turned. I got the very highest level so many times. So don't try to do that. Let the other do the tough job and jump in when the other prove they want to turn and say, hey, I'm with you when the market is continuing in the third wave, so after the breather in the middle.
Awesome, awesome. There's another question. What multi-time frame is best to use? I think he didn't finish the question, but I think that's what he means. What multi-time frame we use best? Yeah.
Yeah, well, that's a very good question indeed. For stocks, for example, I normally have here on the longest, I have here weekly, I have here daily, I have hourly, and something like 15 minutes or something like this. Because stock market is only for a few hours a day, so it does not make sense to have something like 4 hours, because if the market is only open for, let's say, 6.5 hours, you will never have 2 consecutive 4 hourly bars, for example. But then you have an overview, where's the market coming from, and what is the market doing intraday. So I strongly recommend to have an intraday view as well, because even if you don't want to trade intraday, a stock market, for example, then it is good to see how the movement is developing in a strong manner or not, to have a clue what to do. Currency markets, I very often have here daily, have here 4 hourly, have hourly or 15, and here something like 5 minutes. Depends a little bit what you're doing. Normally you can say the longest time should be something you don't want to trade, and the shortest time should be something you don't want to trade. This is giving you extra information, and this or this time frame is something you prefer to trade normally, which is in the typical time, or it takes enough time for your decision making, for your order handling. Sometimes it's too tough to trade on a minute chart because I have to calculate, I have to think a little bit. That's for some people it's too fast, and they should not trade that time frame then, but something in the middle. And the same what I was saying here for the currencies is for all 24-hour markets like the indices, and of course for something like gold or WTI, so the crude oil, which is also in this pattern, I think.
Awesome, awesome. I have one more question if you have time, Rudy.
Yes, no problem. I don't have to hurry.
Wim says, hello, Rudy. I like your presentation. Will you suggest us to stay tuned to ad hoc market news or stick to the chart pattern?
First of all, thanks a lot for the good and the warm welcome here and the good feedback. Well, to be honest, I don't mind what I'm trading at all. I'm just trading the pattern. It's a little bit like when you go to a supermarket. Don't expect that the guy in the cashier is knowing all the products and liking all the products, drinking the same wine, eating the same food, what you like. He's just selling. He's not interested. He knows that someone wants to sell to buy this, so he likes to sell this. As a trader, I'm exactly like this. So I'm not interested in the certain stock or index or currency or whatever I'm trading. So I'm not interested in ad hoc news. However, of course, news, for example, ad hoc news or economic data can move the markets. But the question is, in what direction and how strong? So for me, it's good to know in what mood all the guys in the markets are. It's not so much important, is it a good news or a bad news? Can you imagine someone is coming to a party and there's a bad news? Situation is different when you are at a public viewing. Everybody is really in a bad mood and some bad mood is coming. The people will react different because they are in a different state of mind or a different feeling currently. So for me, it's not so much important, is it a good or bad news? It is more important, what are the people thinking currently? What is the mood? And that's something you can see in the chart. You can see in this chart here, the 15-minute chart with the UK 100, you can see that part, the people were excited or panicking in this case because it's going to the downside. But this is not something like, let's wait or whatever. This is not exciting. This is, shall I buy? No, I guess I will sell it. Maybe you can see the different state right in the chart. So what I do is, and I really like, is I know about data. For example, trading a stock, I know when they have their dividend days or things like this, or will they give their quarterly numbers. And of course, for the broad market, I know when something like the US initial claims on Thursdays or Friday, the non-farm payrolls, these are important numbers, of course, and giving input to the market, I know the time. So before that, I try not to trade because, to be honest, it's just guessing what will happen. I try to stay outside the market. So it's important to know when these are coming up, but don't try to be super smart and know better, is it a good news or bad news? Because very often it's really, really difficult at all to read these numbers.
Amazing. Thank you so much for that, Rudy. I don't think there's any more questions coming from the viewers. And yeah, guys, if you have any questions to either Rudy or myself about ATFX, I have been answering all your questions privately and sending you the links. There's also a link on the chat box that you can use to join ATFX and get all these education resources for free. Just to be part, just for trading with us. So yeah, if you don't have any more questions, I think it's time to wrap up this event. Thank you for being there and sticking through the whole morning with us. It's been great. And as I said before, and as my colleagues said before, please, if you have any questions, queries, or you just want to speak to us about anything related to trading, please give us a shout on the emails that you have over there and the links. I mean, it's pretty easy to find us, guys. So yeah, no more questions. Okay, well, thank you so much, everyone. I hope you learned a lot and that you are able to now implement it. Yeah, it was just saying many thanks to you for being there, for coming today. I hope you can implement everything that you learned throughout the day to your trading. And I hope you continue to enjoy your trading and be successful on it. So see you very soon. Stay in touch and have a great day.
My best wishes also. Have a good day. Bye-bye.
Bye. Stay safe.